Good morning, guys. Sorry about the delay. I was busy placing my bet on the over-under on how many times Powell says inflation today at 10 o'clock. The over-under is 7, by the way, if you're wondering. If you wanted to get on the bet, well, that's too bad. Good morning, guys. Let's get the elephant in the room out of the way. Looks like some members in the chat, I've been saying this the big C word, and not that dirty C word. The other dirty one, crash. All right, guys. Let's try to diagnose what the issue is. I see that the S&P is down 0.5%. Okay. Let me go over here. Let me refresh this. Let's see what TradingView's got. Okay. I see the S&P is down about 0.5%, right? Okay. That seems fair. The Dow is break even. Okay, so value's okay. Russell 2000 small caps. I bet if we split that, value would be break even as well. So that makes sense with tech. Tech is down a lot. Well, that makes a lot of sense from yesterday, and it probably justifies shorting a lot. So I think we're getting confirmation on the shorts for the tech side. Now, let's go take a look at some pre-market numbers. Okay. It really, you know what it looks like? It looks like almost every single position that we talked about yesterday in terms of travel, and we've been talking about for the last 2 weeks, in terms of value, is looking pretty good today on a day when the market's crashing. It's almost like yesterday when we talked about, for those of you that selectively decided not to listen, that there was a flow, an outflow from tech into value. And that's why we saw that the NASDAQ was down yesterday. Now, hold on a moment. You guys are saying today that the market's crashing? Where were you yesterday? Oh, because yesterday you guys were making money on all of your travel picks and everything else, so you just completely ignored this candle over here. And then today you woke up. Today you woke up and saw futures and said, oh, futures are down 1.5%? You've got to be shitting me. This isn't good, George. But you missed what happened yesterday. So if you are doing the surprise face and you're telling everyone in chat about it, no one's going to comfort you. I'm not going to comfort you here. We follow our rules. We don't allow some of these ideas to come in here because guess what? We follow our rules. If you're going to get stopped out, you're going to get stopped out. Guess what? It doesn't change anything, right? All we do is we continue to change our bias based on what's happening in the market. What happens today? Well, we're pulling further and further back. What did we say about this trend line over here yesterday on the NASDAQ? For those of you that also didn't listen to this point, if this breaks here, it's probably going to take quite the fall. It's probably going to get absolutely killed. And we talked about shorting this trend line, and we've talked about shorting this trend line even back in the last summer, that if we would break these sort of last resort trend lines, we'd short. We've been shorting, though, the whole time. Can anyone tell me what we've been saying for the last 2 weeks about this market movement, even if we just look at the SPY? What have we been saying about this move the entire time? It's a consolidation. We talk about the chances of a continuation to the upside, and we lay positions and prepare. Yes, we've been mostly trading through value, and value, of course, even though it's in consolidation, we can pinpoint and track not through the average, but through our own sectors and everything else catching velocity. And so we've done well, but we're aware that we're not trading the average. It changes our bias, we understand our demand from it and overall supply. This over here is very different territory. This is just setting up a very similar situation where we trade flat into a trend line, right? And we have support. So over here, when we look at this side of the market with value, and again, this isn't, we're not looking specifically at value, but when you look at what's going on here, really the only thing that's getting beat up over here is from the tech side, right? And we know it's all tech related. And how do we know it's all tech related? Because value is up. It's been doing very well. Look at these charts. Even AAL here, it has zero reason. There's zero reason for this chart to be up today from what you guys have been talking about in the morning, right? But there's a reason why all of these charts continue to do well. And again, you gotta stick with what's working and remove some of the average ideas, because no one here is trading. I know no one here is trading the average. So if you're using the average, when you look at that Q's chart or the SPY chart, if you're using that to actually change your point of view and using it for your trading, then it doesn't make sense. It doesn't make sense if you're in, those of you that kept talking about MGM, right? If you're in the MGM chart and then you're looking at the NASDAQ being down, are they related? Are they related other than in a macro sense, right? They're not. And so you gotta cool the jets on some of the ideas, because I want you to look through some of these ideas. We've been trading TCOM, intermediary travel. TCOM is up 6% this open. Now, here's a good example of something that we just can't get into, right? We traded ZI to the upside, and it's been trading downwards. There's no way you can catch this. Okay, it's up today, but you can't catch this, right? This would be an example of a chart that's trading with the average. We could not enter this anywhere, right? We don't trade like that. AMC from yesterday, continuing. M, we entered this M trade, right? From Friday. This is now, it's still continuing, right? Is this slowing down because of the market? Doesn't look like it. Sono. This Sono break from yesterday that we were talking about, a lot of people in chat talked about it. Obviously, we traded through here, transitioned. This is continuing, right? When you start to look through some of these trades, again, the things that we've been trading are continuing, and until they reverse and stop, just like when I prompted the question yesterday and we were specifically looking at some of the airline charts, did you hold your positions? And everyone said they held their positions. Well, you're still continuing here. Now, there are charts that, of course, are reversing, and you know what we talked about? We talked about transitioning. We talk about transitioning every day. I'm going to use the American Airlines chart just for the example. We talk about it intraday. What do you do here? We entered. You're trading through. You're only taking profit on a reversal, or if there's a rejection out of resistance. We follow our rules: buy support, sell resistance. What do you do up here? You take profit at the trend line, your resistance, and as you take profit, you look to re-enter new contracts, right? Do we have a chance to re-enter yesterday? We didn't. We talked about it. Are we going to have a chance to re-enter today? Well, it's going to be dependent on, I guess, a lot of you's ability to look through some of the things going on in the broader market, and maybe you do need to take them into consideration. We're going to talk about that. But again, we take profit at resistance here, and then we're looking for the new opportunity, which is almost always a break through the trend line, right? This is almost the same case on every single chart, and we talked about this on a lot of charts, that if you look at CCL, it is in the middle of nowhere. And we talked about it's very hard to go take profit over here, other than the fact that a lot of you are usually in positions that we talked about, even, I think it was C-Trader, or maybe it was Met, that this 5% loss was like 130% loss on the option. As soon as you start to lose that percent, you're taking profit on it, of course. So a lot of you took profit on these. So we need to, let's stick it with the rules and remove some of the bad judgment, which is going to lead to further bad decisions down the line, because a lot of you have made very good decisions and now trying to look at the market through, well, you know what? I bet it's stimulus related. You guys are all off the page. If you actually want to talk about what it is, it's inflation related. But do any of you actually know anything about inflation? Can any of you seriously say that you know more about inflation than most of the professional traders out there? Absolutely not. And so there's a reason why we do not trade on some of these ideas, and we don't trade on fundamental business ideas, because guess what? You don't know more than these people do. You know what you can do is you can use your competitive advantage of being smaller and trade with a technical idea, and you can get in and out of trades a lot quicker. So we buy support, sell resistance, we trade on trends. Those are things that you can do better. You can't do better analysis. You don't have the data. You don't know how the hell inflation works. You don't have the speed to be able to trade news, right? So that's why we removed that. So those of you that you haven't heard me say stimulus this the whole year, other than when we're just like jousting about it. I have not talked about rationalizing a trade with stimulus since last year. So why all of a sudden would we bring up stimulus, right? Yes, we are aware of it, but guess what? It got priced in fucking months ago, right? It got priced months ago. It's like this. I was laughing yesterday about the CCIV thing. It's like, what's going on here, right? We know. I'm going to talk about this trade over here again because it's really silly that I'm getting DMs. Listen, guys. Well, I talked about this trade over here, right? From Thursday at the low over here. It was right around this trend line. This was a straddle. I went long and short. A straddle means that I need a big move one way or the other because it needs to clear the premium of the other side. Now, obviously, I already got rid of the calls yesterday because we were making a downside move. So, listen, okay? If you went long Apple, and there's a lot of you in here, and I'm not shitting on anyone specifically, just all in general. If you went long Apple, and because I didn't say I'm taking profit on my Apple position, and you held your position, or you got a bad exit, then you specifically removed the part where I was shorting this ticker, and we've been talking about shorting this ticker for at least a month now, right? We've been talking about shorting this just like Facebook. I've been talking about shorting Facebook for 3 months. If I talk about it, it's not because we're just talking about it, right? We don't just talk about things here. We don't just watch price here. If I'm talking about something, it's because it's what we're actually doing, right? Sometimes I think there's a lot of joking. Guys, if we're looking at something, we're not just watching price move and tumble and everything else. They're active trades. They should be actively traded, right? You need to understand some of these ideas and understand that, yeah, this is actually going on. And we talked about it over here, the idea of it coming down. That's the trajectory it's on, right? Tesla. I just want to make sure because a lot of you have a hard time on the short side, and I know you have a hard time, and it's all of us have the same problem. It's very hard to think about the downside here, right? But we talked about from this candle as it broke down through this trend line in here, and I've, again, obviously since redrawn, we talked about on this candle that it was breaking down, and I drew this line. It's the same line. All I did was put it over here now. It's that same line I drew before, right? And then, again, on the long side, I mentioned a chart, and you fucking have no problem going to buy it, right? You gotta take away, there's like all of us have it. There's some sort of side, like maybe it's the left side of the brain, whatever it is, that's blocking some of the ideas, and you just start to, the dark side, and you just sort of go with your idea. But a lot of the times we're just wrong, right? We're just wrong. That thought is wrong. That no, it'll come back, and I'm going to use it as an example for the market because I want you to see how I can be wrong in some of my understanding. Over here, I talk so much about there's gap chances, right? But this is probability, right? I'm not putting an entire portfolio on the idea of a gapping. When I'm talking about gapping, I'm planning. Just like when we draw charts, we're planning for a move. All we can do is react, though. And so I think a lot of times, though, we need to understand that when we're setting a plan, that doesn't mean we're absolute. We're reactionary traders, right? All we can do is react. So in this sort of situation, right, what are we doing over here? Well, we were going long through here, right, because the idea is that value is going up. And so what's happening here? Well, we are getting paid on most of this move. Are we getting paid on the whole move? Absolutely not. Absolutely not. We're not getting paid on the whole move. Are we getting paid on more than half of the ideas? Yes. Are you getting paid if you have dirty out of the money short terms? Probably not. You got to be in the right positions and do your best on timing, right? We can't be perfect at timing. You're never going to be perfect. Are we in a situation where we need to stand back a little, be patient? Have I said the patient word this week? Yes. Did you forget about the patient word because you saw big fucking 10% gains on the underlying across a lot of the tickers we looked at yesterday? Yes. Yes. We have been extremely patient in here. Very patient, but it's very easy. And again, I want to make sure this is very clear because we need to really dictate the way we think, and also I'm just spitballing for myself. We went into this week talking about being very patient, right? And last week we had very tight stops. You can't do it both ways where you have a big green day and now all of a sudden, since you have these big gains, and obviously some of you lost those at the tail end of yesterday, but it might be also why you lost at the tail end. You can't have big gains and then have all of that green now change your point of view, and now you're just willing to push everything and you want to be a part of everything. And then on a big red day, oh no, the market's crashing and I need to sell everything. You can't go back and forth with those feelings. You need to just be on one level. Find your baseline, have that be where it should be, the baseline where the rules are, right? And try to stay as close to that baseline as possible. You should not be going up and down in terms of emotions every single day, or your ideas every single day, because of the way the positions you're specifically looking at are going up or down, or the ones that we're looking at are going up and down. You gotta stay cool, right? You guys get so excited about gains and then get all depressed about losses. Try to find an equilibrium a little bit, like supply and demand, right? Find that equilibrium. What are we doing right now in the market? We're trying to find equilibrium, right? This was full demand, and now we have a lot more supply. We're transposing our trend line, our supply level. We're trying to find equilibrium. When do we find equilibrium? When price is tight, spreads tighten, we see it in price, right? Now we saw it in a lot of different tickers, and we take advantage, right? We trade breakouts. It's very hard for you to capture those if your mindset is, whoa, big day here today. Call my mom. Oh God, mom, I lost it all. I need a loan. Like, you gotta just try to keep some of it in the back of your mind that this is not a daily thing. This is about where you're going to be next week. Where's price going to be next week, guys? Where's price going to be next week? You get stopped out, that's okay. You make a big gain, that's okay. But they're all the same thing because it's all a part of the same. It's all part of the same process, right? If you're going to lose money this morning, don't look at it as, oh man, this sucks. Am I going to lose some money this morning? I'm going to lose some money this morning. Is that going to stop me from doing my job? No. It's not going to stop me from doing my job. Am I going to make some money this morning? Yeah, I'm going to make some money this morning because I'm going to be working. Am I going to make money by the end of the week? Yeah, I'm going to make money by the end of the week. Are you going to lose money? You don't know. If only there was a way to know. You know, because you know yourself. If you're willing to buy up here, you should be willing to buy down here. If you're willing to buy up here and then you sell down here, that's your own fault. You know yourself better. If you were going to sell because of that, then you shouldn't have bought in the first place. Too many of you do this, where you wait, all of us make gains. Listen, it takes a very small amount of time. And it's just like it's just like this position from yesterday, right? Guess what? This is still up. Well, now it's 5%. This is still up 5%, 5.5%. This is up 5.5%, and guess what? That position you guys entered gets stopped out, right? It's still up 5.5% though. Most people right now are up at least 50% if they entered at open yesterday. That's the difference. The difference is about 10 minutes. So this is where you need to be prepared, because guess what's going to happen? You could be red or green because of 10 minutes of time. And a lot of people in here, you were 10 minutes late, and that's why you're red. And the other half of the people that are green, they bought 10 minutes earlier than you. And you're the reason why their portfolio is green, right? You got to remember that a lot of this comes down to a very small amount of time. Even if it's the same decision, it's about that small amount of time. And so a lot of you are looking at it like, wow, how am I down? Or wow, I can't believe that this is affecting me. You need to go look at your trades and find out what exactly is going on. Because a lot of you, we're all in the same trade. We're all in the same trade. You have to be able to critique yourself. Because, again, a theme that we've been going on is when you look at some of these trades, if you're losing on them, then you're just doing something wrong. It's like I mentioned the CCL thing. If you 5% lost on the underlying and that's 130% on your option, you are gambling. You're a gambler. We're not gambling here. You should never get, no one here should be getting blown up if you're following the rules. You got to be willing to take the time. We swing trade. We day trade when we need to. We swing trade, right? This morning, let's go real quick. The dollar hasn't really shown any break chance. A lot of this is tied to inflation. One note real quick, we have 5 minutes. Powell speaks at 10 o'clock today, okay? Powell speaks at 10 o'clock today. The market, what does the market do? it stops moving until Powell is done or when he's talking, right? Everyone is neutral. Do you think some of this price action might be a little due to him? Probably. Don't forget that. Powell is going to be talking about some of the inflation ideas. If you guys have seen any headlines about bond market, we've been talking about the bond market. Treasuries are all over the place because of the idea of inflation. We can see it in the ETFs, right? This constant selling, right? This whole move through here. There's a lot of cash out there. Take a look at volatility. Volatility is a little elevated. Volatility has been on a trend. This is leading into the event, which is Powell to speak. You need to be prepared for what you're going to do if the market starts to move one way or the other, right? You don't care which way it moves. You got to remove the I care part. I want it to go up. I want it to go down. It doesn't matter which way it goes. You trade it the same way, right? I posted a large list of tickers. If you want a specific chart from one of those tickers in the big breakdown list, I posted like 30 something tickers. If you want a specific chart, I will post it at lunch. So just let me know which one you want. Again, I'm waiting on TradingView to give me some more drawings. So you guys let me know. So we're prepared, right? We are prepared. On the loss side, in terms of some of these tickers, you got to be thinking about, okay, what can we do here? So like AQB, we wanted to get a new trade over here. We were waiting. Well, now it's down here. That's a no-go, right? That's a no-go. There's plenty of tickers. Blink, we talked about shorting it. Look at Blink. It's down at 38. See you later, right? A lot of these charts, again, you got to be willing to short some of these. If you can't short it, then stay on the sidelines. There's nothing wrong with staying on the sidelines and not doing anything for the day or for 2 days, right? If you don't have clarity yourself, then don't trade. We need clarity, right? Now, do we have clarity in the market here? We do have clarity in the sense that we're consolidating, and we know where the money's going. We know that money has been rotating out of tech because of the reinflation idea that I've said so many times, with it going into value, right? There's less to gain on the heavy mega cap tech side than those charts that should retrace, right? Now, the schedules are a little all over the place, absolutely. And so we've been seeing this convergence idea play out, where the idea of convergence in a sector being that some of these charts really lead, and then as the others catch up, those charts start to take profit. You got to be willing to go back and forth, just like we talked about with the healthcare and bio play. We would capture the gains on the bios, and then they would start to flow somewhere else, and we'd go follow those, right? You got to be a little bit more liquid in terms of your maneuverability and the way you trade. If you're not in some of the trades that we've been doing again with travel, I want to again critique and remind you. And again, this is not, no one should be gloating about anything. I want this to be purely critique. That if you didn't capture those gains and then you're taking losses right now, well, that's exactly what we take gains. That's what we get gains for, is because if you made 100% over the last week and now you're down 10%, well, there's a big difference there if you didn't make anything the week before, right? And so that's why you need to take, when the opportunity is there, you have to take the opportunities, or else you really are getting beat up, and it's not fun to get beat up every single day. Be patient this morning. Understand that it's going to be about 30 minutes until Powell speaks. And so you don't need to do anything for 30 minutes, right? You don't need to force anything. I've been saying it. You don't need to make a miracle happen, right? You lost 10%. Don't make a miracle happen. Make that 10% up over a week, right? No one here should be projecting that they're going to make 1,000% this year, right? You're not going to make it all at once. Just be patient. It's consistency that matters, right? Consistency that matters. And also, in terms of shorting and shit, if one of our charts that we're long on all of a sudden doesn't make a move, that doesn't mean you can short it either, right? There's specific charts that we can short because of breakdowns. We don't change the rules just because it goes up or down. Some of you think that you can go long on green candles and short on red candles on any chart. You can't. You can't go back and forth. There's timing. We watch price consolidate, and then we trade it based on the break, right? That's it. That's the only way you can actually have any clarity. Otherwise, you're in for the long haul at that point, right? All right, let's watch. We've got trend lines. We're watching for support here. That Some of our meme economy type charts can be interesting to see what retail does today. Again, we want to see retail's reaction in terms of the market. Again, you guys are a very good gauge for retail, and so I can learn a lot from you guys, just the way you guys have talked this morning. So it's going to be interesting to see that in price, though. What are they going to do with some of those? A lot of us took that AMC trade yesterday. What are we going to do over there, right? You could have the underlying going up and the options going down. You never know what's going to happen there. And again, I think a lot of you saw that. A lot of those charts that you saw down earlier actually started trading towards the upside. Do not sleep on those ideas because, again, what happens on days like today and in the weeks we've been having, those last 2 weeks, if the market's trading flat or downwards consolidating, that demand wants to go somewhere. And a lot of the times it's the charts that we're watching as it breaks, right? All right, we're watching for support here. And again, this is a tech related. Let me show you the cues real quick, right? Tech related over here. This big breakdown here. A lot of decisions to be made over here. A lot of decisions. This chart, we have support. We're looking for the support over here. It's about 1%. Again, every move on this chart's about twice the size of on the SPY, but it's about the same dollar amount. You guys are doing okay on your NCLX position, by the way. You guys are doing okay. Let me show you real quick. You guys are doing okay. Selling, but you're doing okay because you guys get the Junes. All right, coming to the support here. Now, again, this is the average, right? We were not trading the average. We were not buying the average on the way down. No one here, and not myself, bought the average. We did not buy this on the way down, right? Now we're at support. Same thing here. A lot of times because we look at this, it looks like we're buying on the way down. We have not bought on the way down. We bought at specific points where price has then bounced in our charts that have broken out. Be very careful on your understanding of what we're looking at in terms of charts. Reversal, rejection, reversal candle, right? You get the rejection, here's that. So if you were still in it, you understand that this is my 2 dailies. I got the one pullback here and this sell here. Again, you should have transitioned already, but a better example would be like CCL here, this pullback, and then this candle. You're making a decision based on this. This is holding here. So you got to be making some decisions. Reads continue. So again, value is continuing, guys. Value is continuing. You don't want to short. Well, you got long opportunities still. AMC's now at 12. Where is that? AMC's now at 12%. Good job, AMCers. And again, we didn't trade that. We just traded off a price. Obviously, there was like a news event involved with it. We just traded on price. And we'll exit on price. All right. Let's see what we get here. Holding. Holding. Let me show you the VIX. Spot VIX. VXX. Uh-oh. Trading view. Come. Bets coming in. This is going to lead into Powell speaking, right? Now, this, first of all, is the first break we've had of this trend line. Very important, right? We've talked so much. Think about all those times that we've seen sell days. We never broke this. Watch this. Watch this very carefully. This is the betting on the short term right now, right? This is really important because we know there's an event. what does price do, or what does the value do on volatility? It will rise into the event until it happens, no matter what, right? And then it comes down to what happens in that event. There's nothing Powell's going to say that's going to surprise us. There's no surprises. He does not surprise the market. He knows better. You need to be making thoughtful decisions that are not sort of like, they can't be voodoo surprise type trades, like betting on things that are unlikely to happen, right? Best bet is to react. Win. Like, again, like, I really do hope that maybe we need to do something with portfolios that would help. I do want to make sure that we're understanding on some of these, that as you continue through this, you're looking at it through just the lens of this chart, right? And so even if this starts to pull back or something, understand that this was up 3 up to 5% even here. Disney, yeah, these type of trades, like if you're a part of these different trades, I really want you to make sure you're looking at it through this chart. And yes, you're aware of the market. We talk so much about macros and understanding things, but there's so many points you lose by removing yourself from the equation because of other people. We don't care about other people and how well they're doing. We just care about what we have control over, right? So many of you guys talked about this MGM position, and we traded all the other travel tickers and casinos over here, right, and continued them. And then this is the new MGM trade. So many of you talked about this, but if you're holding yourself back because of what you see in the market and because you convinced yourself that the market's going down, it's on you, right? Why do you care about what other people are doing? The market is just a group. It's just a bunch of other traders and getting their average, right? I mean, I don't know. I really don't know. From my understanding, everyone here is doing mostly the same thing. So, I mean, this is your guys' chart. That's your chart. Okay, here comes this buy. It's going to come down to here instead. So this trend break, I would say, is significant, but we do have an event. We're going to keep that in mind. Again, some of you are looking at me like, if only there was a way. Some of you have still not digested this, because I know for a fact some of you are looking at this and are not looking at this chart, because you're just looking at it in the sense that price has been up here, and you're blocking some of these candles out. You're just blocking this from your view. This is price coming into here, just like I talked about on the Apple chart, right? Coming into here, like the Tesla chart coming into here. And then value. Value, we said, might get affected by the average. It's by how much does it get affected by the average. When you look at banks, how much does this get affected? Banks are still up today. Brian asked last night about rates and everything. But again, rates are not going to be changed. Rates are not going to be changed for many years now. But it's the idea of inflation, the reinflation idea. Banks, of course, love rates. If there's inflation, then rates will come quicker, right? And so, but what is all this here, guys? And why I said you can't miss this trade, and why it's so important to understand why you could have continued to buy this. What's happened in here? Well, banks were allowed to start buying back. What happens if a bank buys back? They're removing supply. What happens if supply is removed and demand stays the same? Price will increase. What happens if demand increases? Price will increase by more. This is all supply and demand. All banks do is remove supply from their stock. Why would they possibly want to do that? Why would a public company want to jack their price up? Does it have anything to do with maybe raising capital? Why would a bank want to raise capital? Why does a bank take in funds from the likes of you, right, and me? Now, you're getting a bit of a bearish candle because the market is selling on the average, so you remove an average amount. But take a look at this, right? In terms of value. I talked about this is the benchmark of value. Banks are the benchmark of value. They really are. Energy. Some of you guys are looking at these charts and going, I really wanted to maybe have my voice piss some people off today. Because, again, it's just understanding the flows. That's it. Not how many iPhones are made, or that there's apparently an iPhone 13 coming out, and I just bought the fucking 12 Pro. The hell is that? Why are they releasing a 13 after I just got the... I don't even know. I don't understand. If you're having a hard time, then stay on the sidelines, right? If you've missed the ideas and it hasn't clicked, then stay on the sidelines until we have something more clear, right? For you. It's important to understand that it's not everyone's moment. You're not all going to have the same moment. And you need to just follow your rules. All the stories, anything, it doesn't matter. If your rules come into place, you need to get stopped, or you need to sell at a resistance or reversal, then you need to do it, right? Or you need to stop yourself from buying, even though the story might say to. By the way, you guys did get stopped out. You get stopped out at 420. Good start, boys. Patience. 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 We're about halfway through the trend in here. A reminder, this here to here is about 7% here. So far, you're close to halfway. You're close to half, about 3.5%. 3.5% is this support. So in terms of relative reversal on trends, again, it's only been a week. So in terms of if these were like 2 daily candles, then this would be normal, right? So again, this is a normal price movement. Healthy price movement, right? Healthy price movement. Okay, you should not be buying a put here. So for anyone that's wondering, first of all, no one should be trading this average because you do not know. None of you here know because I don't know. So when we're looking at the average here, we're just seeing what other people are doing for our own positions that we want to trade, that we planned for. Don't be trading anything you don't understand. You guys don't understand inflation, so don't try to trade off of inflation. You guys don't understand how businesses work, don't trade off of fundamentals. Those kind of ideas matter. Don't all of a sudden change the game just because it's not going the way you want it to, right? You can remain on the sidelines for a day. In terms of where this is going, again, we've already got the levels put. We already have the levels. Understand, again, tech here, if only there was a way. I mean, if only there was a way we could have known this, right? I don't want to see any of that junk. None of it. Now over here, in terms of this average and the way we look at it, again, there's some growth in here, but in terms of value doing very well so far. We need to continue to hold that bias. Understand that there is money going from growth into value still, even though some of them are selling. It needs to be by how much for when there's a next opportunity, right? Right now, all of you should be looking forward to when's the next opportunity, when would it come, what would it look like, what's my short opportunity. The short opportunities on charts are based on the levels. So trend line break, that's a short. Not specifically talking about the average, but any chart. Just like, shorting any of these. Again, you're missing out on this. I talked about it. This right here, go look at the puts and you let me know. March puts. Go look at the March puts. Go look at the Tesla puts. You guys let me know. And then let me know about your long side that you had to take profit on or sell. If you had an unwillingness to short on some of these, then you probably are losing money. For these other positions like this, right? Your decisions are based off of your length, right? So let's say you're in the win position from just even over here, right? Or if you entered over here, you enter the long position. If you're in a short-term position, something like March or April, you were taking profit on this not only because of the move from yesterday with a bearish candle, right? But also because the market is removing demand, and so you know that you're going to lose tempo, right? There's a tempo loss because of the market demand, so you'd be taking profit. If you're in something longer dated, for example, well, you do have a different understanding because you can hold through a week of consolidation if you're holding something like June's, right? So you do have a different timeline, and you need to, if you guys are in long-term trades, you know you shouldn't be reacting to every single price move, right? That's why we take breaks at lunch, because we don't watch price during lunch. It doesn't help us. Something like this here, you're going to have a hard time in terms of later profit if you're taking profit here on long terms, because again, your profit's on the tail end, right? It's the tail end risk that's actually allowing you to get any profit then as you get closer and closer to that date. If you're in short terms, of course, you need to be removing it because the idea of consolidation is very high, which is why people are doing it over here, for instance, right? And we talk about the transition because of that. So, again, you got to be making smart decisions here. I know you guys all hit if you're in long positions, you all hit the sell button immediately, but okay, there's that support here. What is the strength of this support here? I would say this is probably a significant level because it's halfway in between this trend. We talk about that relative reversal point, historical sort of retracement in terms of candles. Again, usually it's it's a candle move followed by halfway in between. Let me just show it you've got a move one day and then it retraces about halfway in between the candle and then it makes this decision, right? That can also be within a week, 2 weeks, 3 weeks. It's the same idea, right? So we've now retraced this trend line, or this trend, that's only halfway in this trend. We still are up from over here. From the February 1st, we're still up over 3.5%. You got to keep that in mind. This is a significant position because of that. And then you can also check the flows and see the difference. Here's February 1st, tech, of course, outflowing more. Over here, we're still not even close to there, and so our halfway point is here. Look at the halfway point from here to here. It's about the halfway point, but you can see the different levels of support. Understand the differences on these charts, and understand that you're consolidating in the same way, right? It's going to get very interesting on volatility. Again, there's so many different scenarios that can play out here that we just don't know. In terms of I'm talking about in terms of volatility, and then the way that the bonds will change in terms of Powell speaking, right? Based on what Powell says, get those algos going. I'm sure there's going to be significant volatility. I mean, in terms of what happens here, you get 10 minutes, you're going to probably get 30. You're going to get 30 something. In the next 10. Those of you that don't trade volatility, again, volatility should just be a part of your portfolio revolving, right? We talk about it. I think Phibbs is our resident volatility. I said it. He heard me say it once, and he's decided to add it to his portfolio every single day. Which again, it should be a part of your port if you're a big boy. Those whales in chat, which says, I hope he talks about plugging the economy back in. We don't hope. But there are going to be opportunities, right? There are going to be opportunities. Absolutely. Absolutely. But we need to wait for consolidations, right? So again, we're not going to buy on we don't buy on this. We're going to wait for consolidations. We're going to wait for a consolidation like we always do, right? So again, we don't pull the trigger on this move, and that's why we're not talking about the average here. We're talking about our charts. And, you know, there's some very clear plans out there that are working for us. All of our healthcare trades, right? Here's Anthem going. Again, this is a tank. This is a marginal trade. For every 1%, you're getting a significant number on the options, right? Even this take profit is retracing into halfway into the candle here. This trend, this move, this was already 100% play up into here, right? Already. Higher low still. How dirty are we going to get in here? If you're willing to buy up here, you're willing to buy down here. Everyone was willing to buy in here. Oh, boy. And also, we know that volatility is so correlated to the negative side, but not the positive side. So if the market's going bid, we're not getting volatility. But if it goes down, it's going up, right? What happens if you get a whip? Powell says something about God knows what. What happens if this plummets and the market bounces and we create some wealth today? FYI, we know there's a ton of cash out there, right? We know there's a ton of cash out there. You guys want to see the short list? Here's our short list, so all the shorts that we've posted over the last 2 weeks or so. Here's how they're doing today. What are we losing on? Oh, gold. Well, that doesn't count. No one's trading gold. That's the bearish gold. CZZ, CNE. Okay. Well, it looks like we got about 50 to 3. There's the shorts. Again, be careful on these charts. I know a lot of you want to go buy support everywhere. There's a time and place. Time and place. Time and place for sure. But your rule is to buy on support. Sure, you can get away with it, but you better get out real quick. Price needs to consolidate after these moves, right? Like when you think about this in here, you're buying in the middle of nowhere. Buying in the middle of nowhere. Talked about laying the rope yesterday on GoPro. That got a bounce down here, which is very finicky. Okay, Powell time. I get 6 minutes to Powell. Volatility coming down. Lot of buying. There's going to probably be today's going to be a weird day because you're going to get a significant inflow after this outflow no matter what. Even if the price keeps going down, right? Let me show you like some of the intraday movement here. The bounce on support is consistent across the market, right? Consistent across the market. Doesn't change anything. Doesn't change anything. This needs to consolidate. It's gonna be staying down here. It's gonna be staying down here. If you whipsaw before Powell even starts talking, then it's just a fake. It's a fake out. Or just price being normal, right? Price being normal. But you're gonna have reactions during Powell speaking, so that's why you can't be. You gotta follow your rules and stay. You gotta stay. You got to stay rules-based and not be going off on tangents, right? and then again, remove some of these market ideas from those charts that are completely disconnected. Those charts that we've been following their consolidations and then trading them on the breakout, right? Those charts that I've recently posted, so many of those we talk so much about a chart having its own velocity. You've got to understand that that velocity it has is because it's separate from the market's supply and demand, right? And that's where it's hard to tell what's the difference. We know you got to know the difference. If there's a chart for it, it's likely different, unless there's something specifically tied with a sector and convergence, an indice because of convergence index. CI chart's got a ton of stuff going on it, huh? Cigna. Again, healthcare, guys. Healthcare, I mean, I know I've talked so much about it, but I do want to make sure that it's understood how well value is holding right now. Still, banks, value is in healthcare. These have really, I mean, this is where, again, if you're a part of the trades, if you're a part of, first of all, if you got the profit on the travel trade from the last 2 weeks, then you're okay with doing nothing. If you've been on the bank ride, you're okay with doing nothing. Critique yourselves. No price watching. So you guys mentioned an ET. ET obviously from yesterday, a big move. Reacting with the market over here. Of course, there's some retail. Definitely some retail in here. Reacting. Whip. Looks like the rest of the market just on a little bit more volatility, of course. IV is obviously quite higher than the average. Looks fine. All right, let's see what we get here. Got 2 minutes to Powell. Let me get my... All right, new window. And again, for those of you golders, and I think Fibs, you're one of the big gold positions. Yes, gold in the future will go up. But let me tell you something. Rates are not going to be raised in quite some time, right? If Powell says anything like he usually says about rates not being raised anytime soon and we're going to keep supporting the economy, gold is not going to go up. Gold's not going to go up. It's going up because there's hedging into Powell speaking, right? It's hedging into Powell speaking, and it's just on the normal. As soon as he says anything about rates not being touched, it's going to sell. I promise you. If only there was a way to know, right? If only there was a way to know. So those of you that, I don't think anyone is actively trading it, and Fibs is just in a long position. But just again, these things are not surprises, right? As soon as we know that there's no rates being touched, and they're not going to fucking touch the rates, guys. They're just not going to do it, right? There isn't, it's not like some, it's not like some weird surprise or something, or like, how would we ever know if there's you guys know better that these macros are tied into such simple ideas, and there's really no such thing as not knowing. It's just being faked or convinced on something else because of your own story, right? Where you have an idea and then maybe you got an echo chamber of people that believe the same thing. They're, again, I don't know. I don't know where the ideas come from, but we know. There is no surprise. It's going to talk about it. It's going to talk about projections and everything else. And the big thing is we want to hear about inflation because we've been seeing inflation expectations. Remember how inflation wasn't moving at all? And we talked about how hard it would even get to 2%. But we've seen some numbers start to push up. And so now the bond market has been reacting and trading based on inflation expectations, right? And so Powell's going to tell us whether those numbers are true or not, whether the market is correct or not. The market is filled with some, let's be honest, not the brightest. Yeah, they get Ivy League educations, but that's not the full average, right? Those are like some of the smart players. They're not the ones telling their ideas, right? You don't tell, well, you do tell people if you have good ideas, but after you're already in position. A lot of volatility right now. Bouncing back and forth. This is stop moving. Coming into the what Powell's talking about. Okay. Hasn't started yet. Hasn't started yet. I gave the wrong link. There you go. In terms of what to do with cash, right? We are waiting on charts that you want to be a part of. You need to wait for consolidations. You gotta wait for consolidations. You can't be minute to minute and day to day. It's a longer term. It's a longer term process, right? It's a longer term process. Anthem, of course, continuing. Again, some of these moves, if things are moving on today, obviously, we talk about this idea so much. The demand's got to go somewhere. Getting confirmation on a lot of our ideas. Again, the healthcare idea was a long-term idea I had. So if you're seeing, if these move, right, it's because it's a long position. It's not some short position idea. It's not a trade. These are like true investments coming in over here. We trade it, but there's the other side of price. The reason why it's a tank and moves the way it does because it's actual investment, right? We trade it, and it's going to be a little bit longer because of that. SKT, if you guys remember my spiel about these charts here, and we mentioned SKT from last week, mentioned it again yesterday morning, talking about it. What do you think? REITs, value. Again, there is something to be a part of, so there is something to continue to be a part of on the long side. There's a lot to be a part of on the short side. Banks continue to do very well. You got to also understand that if you were already in these positions, for instance, the banks, the market volatility is jacking up your premiums, and you're getting a lot of profit from the volatility on premiums right now, right? You got to remember that if you're in some of these value positions that may be up 1%, you might have just got 10, 15% extra because of the volatility in the market. And you won't lose it if the volatility goes down because it's getting added into your IV. A lot of positions here at break even that they don't need to consolidate, so I'm keeping a pretty close eye on some of these. Some of them have just been sitting in consolidation, right? Cop. So obviously we're all going to be a little quiet while we're watching and listening. More money, please. Print, print. Come on, casinos. Feed me more tears. More tears. Oh, you guys can hear this right now? Do you guys want me to put it on the screen? You want me to put it on the screen instead of the chart? Up to you guys. I'm sorry, I didn't even realize you could hear it. Shit. Alright, we'll just listen. We'll have the charts up. We'll just listen. Here, I can turn it up for you guys. I didn't even know that you guys were on here. My bad. I forgot I'm not using the TradingView app. There you go. Yeah, we don't need to see him. He's just an old dude. Old white dude, to be specific. That doesn't know how to use his camera. Yeah, they fucking took our jobs. A lot of fucking buying, boys. This thing is so broken. It's so broken. It's not supposed to work like that. You can tell how fucked up the volatility is. That's crazy. I can go fuck. I'm just gonna keep making money on my healthcare. What happened, boys? Oh, it's his mic. Wiz, if you want me to give you support buys, $10 per chart. My God, just shut up already. Can I send it to your OnlyFans account? No, that's just a perk. That's just a perk of being here. We already have direction, right? We're just consolidating. My God, can we just do this already? Fucking listen to old white men all night or day. Thank you.
pre-pandemic levels. Although there has been much progress in the labor market since the spring, millions of Americans remain out of work. As discussed in the February Monetary Policy Report, the economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden has been hardest hit. In particular, the high level of joblessness has been especially severe for lower wage workers and for African Americans, Hispanics, and other minority groups. The economic dislocation has upended many lives and created great uncertainty about the future. The pandemic has also left a significant imprint on inflation. Following large declines in the spring, consumer prices partially rebounded over the rest of last year. However, for some of the sectors that have been most adversely affected by the pandemic, prices remain particularly soft. Overall, on a 12-month basis, inflation remains below our 2% longer run objective. While we should not underestimate the challenges we currently face, developments point to an improved outlook for later this year. In particular, ongoing progress in vaccinations should help speed the return to normal activities. In the meantime, we should continue to follow the advice of health experts to observe social distancing measures and wear masks. I'll turn now to monetary policy. In the second half of the year, the Federal Open Market Committee completed our first ever public review of our monetary policy strategy, tools, and communication practices. We undertook this review because the U.S. economy has changed in ways that matter for monetary policy. The review's purpose was to identify improvements to our policy framework that could enhance our ability to achieve our maximum employment and price stability objectives. The review involved extensive outreach to a broad range of people and groups, including through a series of Fed Listens events. As described in the February Monetary Policy Report, in August, the committee unanimously adopted its revised statement on longer-run goals and monetary policy strategy. Our revised statement shares many features with its predecessor. For example, we have not changed our 2% longer-run inflation goal. However, we did make some key changes. Regarding our employment goal, we emphasized that maximum employment is a broad and inclusive goal. This change reflects our appreciation for the benefits of a strong labor market, particularly for low and moderate income communities. In addition, we state that our policy decisions will be informed by our assessments of shortfalls of employment from its maximum level, rather than by deviations from its maximum level. This change means that we will not tighten monetary policy solely in response to a strong labor market. Regarding our price stability goal, we state that we will seek to achieve inflation that averages 2% over time. This means that following periods when inflation has been running below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. With this change, we aim to keep longer-term inflation expectations well anchored. That's why they have policies.
Their mandates to stay
well-anchored
at
inflation
2%.
expectations enhance
Right now, we
our
want it to
ability
go past
meet
2%.
both our employment and inflation goals, particularly in the
we're
current
fucking hitting
low-interest
7
rate
easy.
environment, in which our main policy tool is likely to be more frequently constrained by the lower bound. We've implemented our new framework by forcefully deploying our policy tools. As noted in our January policy statement, we expect that it will be appropriate to maintain the current accommodative target range of the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. In addition, we will continue to increase our holdings of Treasury securities and agency mortgage-backed securities, at least at their current pace, until substantial further progress has been made toward our goals. These purchases and the associated increase in the Federal Reserve's balance sheet have materially eased financial conditions and are providing substantial support to the economy. The economy is a long way from our employment and inflation goals, and it is likely to take some time for substantial further progress to be achieved. We will continue to clearly communicate our assessment of progress toward our goals well in advance of any change in the pace of purchases. Since the onset of the pandemic, the Federal Reserve has been taking actions to more directly support the flow of credit in the economy, deploying our emergency lending powers to an unprecedented extent, enabled in large part by financial backing and support from Congress and the Treasury. Although the CARES Act facilities are no longer open to new activity, our other facilities remain in place. We understand that our actions affect households, businesses, and communities across the country. Everything we do is in service to our public mission. We're committed to using our full range of tools to support the economy and to help ensure that the recovery from this difficult period will be as robust as possible.
Facebook is really cracking
me
up.
Thank you. I'm happy to take your questions.
Thank you, Chair Powell. First, just a yes or no question. Do you agree the most important thing we can do for the economy right now is get people vaccinated?
I would say that yes, that is the single best policy to return the economy to its potential growth.
That's going to help travel.
The researchers in Minneapolis Fed say the pandemic is forcing mothers of young children out of the workforce. Some 3 million women have been forced out of the paid labor market in the past year. Everyday families face impossible choices between their paychecks and caring for their children.
Boys.
The Biden Rescue Plan, as you know, provides the funding we need to get Americans vaccinated, as you suggest is the right policy. And that will help kids go back to school, to help working moms get back to work safely. What can the Fed do to make sure women, especially those with young children, can return to the workforce so that we don't end up with an even bigger lasting gender gap in the labor market?
So the tools that can really address specific groups, for example, women who've perhaps temporarily dropped out of the labor force, those are really fiscal policy tools. Obviously, those are not tools that we have. And I today will stay away from fiscal policy and really talk about what we can do. And I think the main thing that we can do is continue to support the economy, give it the support that it needs. We're still 10 million jobs below the level of payroll jobs before the crisis. There's still a long way to go to full recovery, and we intend to keep our policy supportive of that recovery.
Thank you for acknowledging in your opening statement and your comments to many of us and for your public comments, frankly, about how much we need to do to fight racism and increase diversity. Yet we know historically the Fed's monetary policy has benefited wealthy savers and homeowners. Decades of discrimination in the financial system we talked about earlier, from redlining to the subprime mortgage crisis, specifically targeted Black, brown, and other vulnerable communities. It's clear the Fed's policy and failure to regulate predatory actions in the banking sector have contributed to the racial wealth, income, and home ownership gaps. You've said that the Fed's tools can't address the underlying causes of racial injustice or income and wealth inequality in our economy. I think you give up a little too easily when you say
big
that.
boys
so
over here.
how can the Fed use its supervision authority to enforce anti-discrimination
Trend line on
laws
ZI
and fight
comes in at
racial
60
injustice
and a half.
income inequality?
60, 69.
We do have responsibilities and authorities for fair lending, for example, under a number of statutes, and we take those responsibilities very seriously, and I think carry them out robustly, and that is an important part of our mandate, and so that is something that we can do, and I think we do aggressively. In addition, through our community consumer affairs division, and through the Federal Reserve banks, we don't spend public resources, but we try to attract private resources around, for example, initiatives that will address issues of economic issues of low and moderate income communities and racial minorities.
I think we can do more, but we will discuss that later. Chair Powell, in the middle of the pandemic, bank regulators have loosened capital requirements at the biggest banks, and one of its changes to the capital rules, the Fed stated the rule was meant, and I quote, to allow banking organizations to expand their balance sheets as appropriate to continue to serve as financial intermediaries, rather than to allow banking organizations to increase capital distributions, unquote. In other words, the Fed reduced capital standards so banks would lend more, not so they would pay dividends. But it's, as you know, it's not what's happening. The biggest banks have gotten larger, they've gotten more profitable, but they haven't increased lending. Dividends, however, have remained steady. My question is, Mr. Chair, will you promise to the committee that you will not extend any exemptions for capital requirements for banks and bank holding companies that have continued to pay dividends rather than invest in the real economy?
So we're talking here really about the temporary measures we took with respect to the supplemental leverage ratio, and those expire at the end of March. We have not decided what to do there yet, and we're actually looking into that right now. I'm not going to commit to connecting that decision to the payment of dividends is a separate matter. As you know, we intervened to require the banks to limit their dividend growth to zero and also to limit their share buybacks. And the result, what you see now, is a banking system that has higher capital than it did going into the pandemic, and particularly for the largest banks, and one where the banks have taken very large reserves against losses, and so have proven themselves pretty resilient.
Perhaps, but I also, we also understand that they have not been supporting the real economy to the degree that we hope they would, and we will continue that conversation. And I will send a written question to you on climate that we wanted to talk about. Senator Toomey.
Thank you, Mr. Chairman. Just on this topic, let me just state, I certainly hope that to the extent that banks have adequate capital for the circumstances that they face at any point in time, any capital beyond that should absolutely be available to be returned to the people who own those banks in the form of dividends or stock buybacks or whatever mechanism is suitable. And anything to the contrary is a terrible constraint on our economy and on economic freedom. I also want to just observe briefly, and I'm not asking for a comment on this, Chairman Powell, but if I could summarize and characterize your opening comments about the economy, I think it's fair to say that we have many areas, sectors of our economy that are performing extremely well. Housing and the goods sector, I think you referred to. And then we have very concentrated problems in certain relatively narrow sectors like hospitality and travel and entertainment, which are extremely depressed because of the circumstances.
Depressed,
I think
like
that
many of you in
clearly
chat.
makes a very strong case that if there were to be further fiscal policy, it should address where the problem is and not where the problem is not. But to address monetary policy for a moment or so, I think the Fed's current forecast for growth for this year is over 4%. I think the consensus is well over 5%, with some thinking it could be considerably higher than that. The unemployment rate is now at 6.3, which is about where it was in 2014 when we were not contemplating multi-trillion-dollar bills. And I don't think we were buying $120 billion worth of securities per month. My concern is that the last two recessions were, I think, caused by asset bubbles that burst. 2001, it was the stock market. 2008, it was the mortgage credit market. In both cases, in my view, monetary policy contributed a great deal to the formation of those bubbles. The Dallas Fed president, Robert Kaplan, recently acknowledged that there's a link between the record amount of liquidity being pushed into the system and these unprecedented asset valuations that we're seeing in a whole range of assets, be it GameStop or Bitcoin or real estate, commodities. Across the board, we're seeing quite elevated asset prices and signs of emerging inflation. So I guess my question is, do you believe that there is a link between the liquidity that the Fed has been providing and some of these unprecedented asset prices?
So there's certainly a link. I would say, though, that if you look at what the market is looking at, what markets are looking at, it's a reopening economy with vaccination, it's fiscal stimulus, it's highly accommodative monetary policy, it's savings accumulated on people's balance sheets, it's expectations of much higher corporate profits, which matters a lot for the equity market. So there are many factors that are contributing to to what's happening in markets right now. Monetary policy, I would certainly agree, is one of them.
A little bit of a zone, huh?
Yeah, I would just suggest that, right, I agree, all of those things are happening. All of those indicators of growth and increasingly indicators of rising inflation. As you know,
406, 407,
10-year
somewhere in there, but it's not,
inflation is now over 2%,
not really strong.
0.6%. My point is that at some point, we've got too much liquidity going into the system.
We need to.
The economy
today
is
it will generate some sort of level
well.
in here.
Problems are isolated and should be addressed
or it's just going to come
narrowly. And I hope that $120 billion a month of bond buying doesn't become a permanent situation. One of the things I'm concerned about, I wonder if you could comment on, the risk that we would have an increase in inflation, an increase in bond yields that would correspond to that, but without being back at full employment, what is that? What would that imply? Which I think is a very plausible scenario for later this year. What does that imply for the bond buying program?
Well, so what we said about the bond buying program is that it will continue at the current pace, at least at the current pace, until we make substantial further progress toward our goals. And we've also said that as we monitor that progress, we'll communicate well in advance of any actual decisions, purchases. And so that's what it will take for us to begin to moderate the level of purchases. It's substantial further progress toward our goals, which we haven't really been making for the last 3 months, but expectations are that will pick up as the pandemic subsides.
Well, thank you, Mr. Chairman. I would just suggest that there are a lot of warning signs that have not been worrisome in the past, but now are certainly blinking yellow. And with that, I will yield.
Thank you, Senator
It's
Menendez.
going to consolidate. Everything's going to consolidate before we get
Chairman
feisty.
Powell, at the end of this
Whether it's
pandemic,
one day,
we need
one
to
candle.
ensure that we have a more equal society.
For Z, for instance,
Unfortunately, we're not on a path to an equal recovery.
I think you
As
need
of
on the trend line for a day or
January,
so. Support
Black
buy it open or
unemployment rate
something.
is 9.2%. The Hispanic unemployment rate is 8.6%.
Unless something gets clear. If it comes down in here, and it's got to be clear, but it's going to be a couple days for confidence.
Fed, over the course of the pandemic, the black labor force exit rate has increased dramatically, while the white labor force exit rate has returned
We want to be
pre-pandemic.
we want to be nowhere
levels.
right.
Doesn't this mean that
If we're
the
going to be
black
buying,
unemployment rate is likely
we want to have
misleadingly
clarity that it's
low
going to
compared
continue
to
at
the
least
white rate?
from when we buy, so that we can react, right?
Well, this, as you point out, this pandemic was particularly bad for these long-standing disparities that we have in our economy. The job losses were heavily concentrated in public-facing service sector jobs. Those tend to be more skewed towards lower-paid and in many cases minorities and women, and so that's really where the big pockets of unemployment remain. And so, and you're right. So the burden really has fallen more in the low and moderate income communities than would typically be the case. It's always the case to some extent. This particular event, though, is very somehow precisely aimed at those people, and we're well aware of that.
Well, I appreciate that acknowledgement. We know from the Bureau of Labor Statistics that over the course of 2020, the labor force participation rate for black men and women fell nearly twice as much as it did for white men and women. So you agree that minority families are bearing the brunt of the damage caused by the pandemic?
Yes, along with others at the lower end of the income spectrum, bottom quartile.
Would you agree then that addressing this disproportionate damage needs to be a central priority in relief efforts?
I would have thought so.
Yeah, so would I. Now, as part of the Federal Reserve's mission to ensure maximum employment, what's the Federal Reserve's plan for maximizing employment for low-income and minority workers?
So we look, when we say that maximum employment is a broad and inclusive goal, that means we look not just at the headline numbers, we also look at different groups, and we try to take all of that into account in making our assessment. So we will take into account the headline numbers, but also those for other groups as we think about reaching maximum employment.
Well, I hope that in your mission that the Federal Reserve looks at this, because a Federal Reserve study showed that while high-income jobs mostly recovered to pre-pandemic levels, unemployment among low-wage workers remains
From what I can tell, we're not getting anything
14%
interesting
below pre-pandemic
beyond
levels.
here. So
And this is in spite of
let
the
me take
fact
this
that
off for you guys. I'm
almost
going to
half
keep
of
the.
all low-wage workers are essential workers.
I think
the
I
people
can do it so you
who
guys don't have to
actually
listen to
let us
this.
stay home when we were told stay home to avoid the spread of the pandemic. And
Okay, let me do that. You guys want to listen? You can keep listening on your own. I'm going to put the stream over there because we got to open a statement. We got some of the big questions out of the way. Again, was anyone surprised about anything? No, I don't think anyone really even cared. So So yeah, just a bunch of old men talking about things and what they care about. So let's talk about some trades. Let's talk trading. In terms of the market, I mean, when you look at this, in the sense of trading, let me just remove this. You gotta think that in terms of this consolidation, we know we've been a consolidation. We know that tech has sold, brought this average down. We understand that price wants to trade on this trend, this channel. I think you need one more candle. You need a candle tomorrow. Or you need now this tail end of the day to clarify some ideas. It's very hard to, and again, we're just looking at the average. A lot of these charts that we've been watching are doing very well, and I don't want to keep looking at them because we know they're just continuing, and we've known that the rotation went into them. But when we look at just the market, we're trying to understand the market and what they're all thinking. We've had consolidation. What move are we consolidating? We're consolidating this move, right? This big move in 2 weeks we put 7% on, which is a ton of money, right? It's a ton of money. This is a pretty average pullback, not on the tech side, but we understand that this wasn't a full outflow from the market. This actually went back into the market just elsewhere. And so, again, we're not really trading this, but we weren't trading it up here, right? We were trading intermediary tech. We weren't trading mega caps. We were taking some trades in there, but not specifically long. Where's our chance on a trade like this? It's not down here. It's not down here, right? When would we take this? Well, if it was on the trend line in here, I would be looking for that trade. You need to consolidate these moves, and look at the spread here. Look at the spread there. This is uncertainty. We don't trade unless we have clarity, unless we know when we hit that buy button that immediately after that position is going to be green and it's going to continue. You don't buy options unless your position is going up, so that you can at least break even, right? There are no trades here where you can say, I'm going to be break even as soon as I buy this, and I know it's going to go up, or I know it's going to go down. There isn't that, so you can't look to there. Now, if this closes inside this channel here, you're going to have a bounce back day tomorrow. If it was here, look at the HSI over here, right? This set up today, right? And we've been talking so much about this. What do you think this chart's going to do? What do you think that this is going to do overall if we just remove today and where our markets are today? This would be breaking out, more than likely, right? Continuation of this trend this way. Consolidation, just like our market, just like our tech did, but they're a little bit more bullish and a little bit more clear over here, right? What's going on in our market? Well, there's rotations going on. Where's volatility in all this? Where is the volatility in all this? I don't see it. It's not there. Why is it not there? Because there's not really any. It's been predicted. Volatility is when there's something that's unsuspected. There was no plan for it. That means there was a plan. Just like we've been talking about in terms of value, right? Otherwise, this would be significant, right? This would be significant. It hasn't been. There's no volatility here. There's none. This moved into Powell speaking. That's it. It's not moving because of the market at all. Is volatility broken in terms of spot VIX? Yes, it's broken. And we're getting even more confirmation that this value means almost nothing. Why? Because we know that this is correlated to a downside move. Guess what happened today? A downside move from yesterday and today, and it's not even moving. It's just not moving. So it wasn't correlated to the upside moves. It's certainly not correlated to the downside moves. Volatility, we're just basically predicting no price movement. That's at this point. At this point, there's just not a prediction of any price movement. The dollar, what's it doing? So again, when we look at what we should be doing, we need to just continue with our understanding that value is what people want to be a part of. We need to understand that there's a lot of money out there, flows over fundamentals. All that generates price appreciation right now are the flows. Money continuing to come into the market. Is money continuing to come into the market? You just heard Powell again say it. 120 billion a month. It's not stopping. It's not going to stop. Right? What does that mean? Well, $120 billion is a lot of money. And that's a lot of money for those institutions that are in bonds and have been selling bonds. They're not going to sit in cash. We know they're not going to sit in cash. And so we need to continue trading with our positions. And look at some of your positions here. It should piss you off because we've been talking about it for a couple weeks now. If you're not a part of some of these trades. Yes, you can be losing money, and there's a lot of trades that we've lost money on that, guess what? It's a part of variance. Sometimes this is going to happen, right? And that's why we have rules about not pushing something beyond control, right? We have stops. We put stops at break even. Most people have some weird identity thing of 5% or something. I know you guys have seen that. Oh, 5%. Could you imagine getting stopped out 5% lower? You'd be getting stopped out at like 50%. That's ridiculous. No, we put stops at break even. We put stops at break even. We trade, when we buy on support, and we know we're getting points. When we get to a level, a resistance, we transition for the opportunity to then trade that to the next level. What you guys do today on American Airlines. How many of you bought down here? How many of you took profit here and bought down here? When the market started to whip with itself, and really not a true whip, and I want to make sure we understand that in terms of a whipsaw, the market really didn't whipsaw. Some of these charts that are very bullish whipsawed, this would be a whipsaw. How many of you took this Apple trade from here or from over here, and you transitioned here, you took profit, and you were looking to get that next level, right? Those new positions, that new contract. How many of you actually took profit here and then bought somewhere in here for that next move, right? Something that we've talked about every day. How many of you are still pushing your win trade? I know a lot of you are a part of this trade. How many of you still pushing this trade? How many of you transitioned from yesterday and bought today? Since a lot of you, again, when you do this, you do it in terms of convergence and you do it with the whole sector. So a lot of people obviously transition from yesterday, look to today for a new opportunity. How many of you took profit as this started to pull back? Maybe you took profit right here at like 128.5, maybe 129, and then bought today. You start to look at some of these moves, right? And I think the bank move is still like a really good example of one. But a lot of these are trades that we have been part of in trading. What about charts that we've gotten haven't worked, right? MP, we had to sell, right? We had to sell this yesterday. Sure. That didn't continue, right? That didn't continue. There's trades like what? What about like PayPal or something, right? Remember up here we wanted to continue, so we transitioned here, bought new contracts to go to the upside, and then guess what? It broke the trend line, so we had to get out. Yeah, we want to get back involved, but we have to wait, right? There's a lot of when we continue to look at our strategy of minimizing the downside, maximizing the upside, it's that transition idea and being patient in between that, again, is going to change whether or not you're making money. Z, we take the trade, transition, we have to get out of the trade. What are we looking for? We're looking to re-enter, of course. When can we re-enter? I would like consolidation. I would like some consolidation in here. Could you pull the trigger on a day trade? You can always pull the trigger on a day trade support. I'm not going to do that. I'm going to look for new swing opportunities in terms of overall value, higher percentage. What about something like retail stores? Well, we were very hot on retail stores for a while, right? And we were trading, right? We look at the M trade. We're looking for the move, of course. Did you get stopped out today on this move? Probably. Is that bad? Did you make the wrong decision? Right? When you start to look at some of these things, again, if you're following your rules and you stay consistent with it, you know the overall outcome, right? And you can't allow some of these, some of the variance events to shake you. What about energy? We've been talking about energy and how this chart is very long term in terms of overall. Again, this is the average. We know specific tickers that we're looking for. Again, I think there's a lot of the times we look for that right now gain, that trade that's going to make the money right now. Right? It's not always like that. Sometimes, certainly is. Sometimes you get that 100% trade right there, and then you take it, and it's done, right? And then maybe you lose 10% for the next week. Let me see if we can get some break-even trades here. Let's see. Facebook? Was I wrong about Facebook over here? We got the short in here, and then guess what? It held support over here. It held support. Couldn't short it. Couldn't short it. Am I sad? No. I wanted to short it over here, right? Shorted it over here and shorted it here. Did I get to short over here? No. So because I couldn't enter that short, am I going to be sad? No. This is a plan. When we chart, it's a plan, right? These are plans. This is the plan over here. If there's a rejection, we sell. Didn't happen. It didn't happen. So for those of you that want to make trades, right, and you have a plan, if the rules that we have do not come into place and those ideas are not there, to buy on support, sell resistance, or if you're going short, to buy in resistance and sell support, if those are not there, you can't take the trade, and you don't need to have a feeling towards it. We look at hundreds and hundreds of tickers, right? I look at 1,000 tickers a night. You can't have attachments. No attachments. But what you do want to do is look for those trades or those charts that have clarity, that are going to allow you to take a trade. Look at this chart pattern here, right? What about this kind of movement here? Does that look good? That looks good. What about REITs? REITs look good. Banks look good. Banks continue to do very well. What about aerospace and defense? SPR. What about this break over here that we mentioned? What about the break over here? This continuation. Airlines, travel. What about the shorting on all of the major tech, right? What do you guys, so let's do some discovery and thinking here, because again, you should be patient and not looking to jump into trades and anything else here, right? Do you think this is going to continue? If I show you this chart right here, do you think this is going to continue here? Do you think tomorrow or into this week, do you think that by Friday this chart here will be higher than it is right now at 132.85? Do you think the win chart by Friday close will be higher than it is right now? You start to look at some of these and ask the question, right? Ask the question and then look for where's your opportunity. Can you buy this right now? No, you can't buy it right now. You can't buy it right now. So then you would say, okay, I don't need to think about that. What you need to think about is, where would my opportunity to enter this be? Where's my opportunity to enter on, let's see, what was your opportunity to enter here? Well, it would be on the support and a break. Resistance got rejected here. Okay, your entry would be down here or above the resistance on a break, right? Okay, great. That's all I need to know. Airlines. How do I get the airline move? Well, it was on support. Great. That's it. Where would I enter? On a pullback. Was there a pullback today? Yes. Okay. Well, there you go. There's your pullback. Pullback was today. What about this Marriott position that we talked about over here on this break here? Well, that was our entry. The break here was our entry. Or, obviously, when we were trading, when we were talking about converging, it would have been somewhere with a convergence idea, like a lot of these tickers, right? Save. What are we doing over here? Well, we've had a couple transitions, right? We entered over here. We got the big start to this move, 8% over here. Couple decisions in terms of long-term holding, or you had to take profit over here. Of course, over here, big entry day on the break. Also, if you then entered the next day, transitioned. When did we enter again on this move? We transitioned, took profit, and we looked to re-enter. We entered on the pullback. As soon as we didn't enter on this candle though, right? We did not enter on the first pullback candle. We said we need to consolidate this a little bit, this pullback. This candle here, inside bar on the day, leads us to then be buyers, heading forward. The gap here led us into being buyers again. What do we do up here? Well, we have some transition ideas because we have resistance, right? Did we transition on this trend line here from this entry? I would hope not. You pushed right through the trend line, right? You pushed right through the trend line. And you don't have a position that is so in the money that you're begging for more exponential and more volatility. Over here, you transitioned. What did you do down here today? How many of you took this trade today? You transitioned, you took profit at the rejection. How many of you bought this on support here today? Right? It's a chart you've been looking at every day. How many people shorted? By the way, that move is almost to where I had that candle. How many of you voted for green today? Let me see. Everybody did. Besides Wiz. All right. Zoom, let me go to questions here. Zoom, next resistance, 385. Yep. So what about the Zoom trade? Are we sad about the Zoom trade, guys? Are we going to be sad? Or did we just follow our rules and as soon as the trend line broke, we took profit, right? We entered. Let's think about it. Starts to sell, we take profit, right? We follow our rules. Follow our rules, and a lot of the times, this is either, it's either you're taking profit, and that should just be a net gain, right? That's a good thing. Or if it's a break even, that still should be a good thing for you because you're not losing money on that trade. What about over here? Well, now we need something to change in here, right? This is following the market. Why did we like the trade over here? Because it wasn't following the market's move. Over here, it was generating its own velocity, its own trend, its own technical. Over here, it's following tech. We talked about tech just like Chinese ticker started to do, right? As soon as it starts to converge with the market, then all of a sudden we're not a fan of it because we have no control. And there is clarity that it's going down because it breaks our trend and it's following the market, right? So again, a lot of the times we see these things and there's nothing you can do, so you don't need to think about it in that sense. You move on to the next trade, right? But again, I mean, I think a lot of it comes down to it depends on what positions you're in, and that dictates how you continue your trading. That's where the discipline part comes from. If you're always disciplined, you're always getting stopped at your break even. You're always transitioning at your resistances so that if there is a rejection, you've already taken profit, realized your gains, and now you're ready to re-enter. If you're not continuously doing these things and staying disciplined, you're gonna have a hard time because you're gonna be shaken on every single move. If you're not consistently buying your supports, buying your breakouts, then you're missing a lot, and then you're buying at a later date. You're chasing. What do we not like here? We don't like people that chase momentum. We capture momentum, right? If you're having a bad day today, well, the market's having a bad day. So as long as you're doing better than the average, then you're generating alpha to some point. Are there people in here making money today? Most likely. It's not about today, though, right? It's about what you learned today and about where you're going to have in terms of next week. Because there could be someone today that makes $1,000 here while everyone else loses. Maybe you lost a few $100, whatever it is. But by the end of next week, maybe you're up a few thousand and that person's break even, right? You can't force anything, right? NVIDIA, let's take a look. Semis. What about this move? What do you think this was? Was it consolidating in here? Was it selling? Came into the converging supply over here. Are we buyers over here? Well, you're going to need some consolidation. Would I be a buyer tomorrow on support? Yeah, I would be a buyer on support. I mean, technically, this is one of the grossest hammers I've ever seen, but yeah, I would be a buyer on support. I'll be a buyer on support. Earnings are tomorrow? Yeah. Again, earnings, don't care about earnings. Don't care about earnings. If it opens on support, I'd buy. Are we aware of the market move? Absolutely. Absolutely. But we're not going to change, we don't change our understanding, right? We love this move. What do we do here? What's our practice here? We buy on breakouts. We see consolidations happen, and then we buy on the breakout. This would be a breakout. If we get a move, this would be a great support buy and a breakout buy here, right? We have a couple ideas of trends, right? We have an area that we can buy in, right? We do have an area. And again, that's the average, so no, I'm not talking about specifically buying SPY calls. Not that you couldn't. Not that you couldn't. This is going to generate some sort of bullish candle tomorrow, because it's going to hold in here, and it's going to offer an opportunity sort of like in here. We need to see what that is first so we can react, and we're going to plan for it, right? So again, let's say you lost $500 here today. You lost 10% today. I'm like trying to use small numbers because again, every time I talk about like the through an average, and then everyone's like, well, I'm a little boy. Okay, you lost 5%, 10% here today, right? Well, this is going to offer an opportunity to make 100% over here, right? That next trade that you can take towards the upside, even if it just swings, is going to offer you the chance to go make that 100%, right? Don't think about just today, think about where the week's going to be, right? Value, value, value. I can't keep saying it enough. Value. Is volatility going up? Is the dollar going up? Looks like the movement to me is on the downside. Correlation towards value going up. See, what do we got on the sell side? Is there anything over here? SDC, right? What about the SDC move? Let's talk about this, right? I talked about it from over here. Now, this is a good example of a chart that basically every time it's on support, we take the trade because of the extreme volatility in the chart to make a move. Okay, you bought this yesterday, right? Somewhere on the support. What'd you do at open? You stopped. You get stopped out. Are you upset that your risk to reward, first of all, think about the risk to reward on this SDC trade. Why do we take this trade every time it's at support? Because the risk to reward, we're risking not our whole premium. We're risking break even or a little bit less for the reward of an easy 100% if it makes its move, right? So risk to reward, when we think about our risk to reward ratios, it's always prime over here. Is it good over here now? Absolutely not. Would it be good if it came in here? No, right? So, again, in terms of risk and reward, this is where you start to look at some of these pullbacks. Well, now you need to start calculating, okay, is it worth the risk to take this trade right now? What am I looking to gain? Can I wait one more day? If you wait one more day, that's going to remove a lot of risk. Is the reward going to change that much for waiting one day to get more clarity and more information? A lot of the times, it's worth it to lose a point. How many times do I say it's okay to miss a point for that clarity and understanding that, okay, this is the right trade, right? And again, it only takes one trade. It only takes one trade to usually remove, let's say you stop out on 50 trades, you could then just make one great trade and it would cover all of that. And a lot of times, again, a lot of the times, if you're staying disciplined, you should be stopping out at that break even, right? And I think a lot of you have really done a great job at getting to that point, because it's so important to again, remove those negative numbers from your average. That's the most important part, is you should always focus on the downside before you think about the upside, right? Because removing those it's really the most important part. If you don't have that downside risk, it makes your decisions so much better, right? You're no longer trying to solve the problem of how do I stop trading water. You're solving the problem of, okay, in terms of opportunity cost, which trade can I enter that's going to offer me a higher yield than the next, right? Instead of having to worry about, well, I could lose on this trade. You never want to have to be thinking about losing on the trade. It's not a good way to be able to think about a trade. You want to remove those trades. If it's too risky and there's a chance of losing, then it's too risky, right? It's absolutely too risky. When was your opportunity here? Well, if you transitioned, what do you think? Are there chances out there? Are there chances out there? What about something like pot stocks, right? When does the next opportunity arise on these? Can you do it right now? No, it's too risky to do it right now. You do have some ideas of support on the horizontal over here. In terms of the trend, you of course have some wedge ideas. You have some wedge ideas. Let's map them out. It's very close. You got some wedge ideas in here, right? This is pretty connected. Now, where exactly does this line up in here? Well, let's okay, what does that mean? If we, again, for those of you that also, I think we have some new people that are, I'm thinking of a pattern. It's not until it breaks out that it means anything. We're just getting prepared. You can't take a trade just because you think something's going to happen. It's not until the actual breakout happens. This would be a continuation wedge, right? That's a trade. If that breaks out, is it going to break out? Well, guess what? By virtue of it just going another day, it's going to pop right over here. So whether or not it is on the upside or if it continues to trade down, it could trade to the downside and fill through here, right? And it would still be in the consolidation. So you need to see tomorrow, let's say it closed right here. Tomorrow, if it opens on this trend line, this is like 34 and a quarter, and it starts bid, you're a buyer. That's the reality, right? You would be a buyer. So when you look at these trades, okay, you're going to need to wait a day. Do you get to preempt it? No, because you take this trade right now, you're going to get hurt more than you're going to win, right? Where's the trend line in here, guys? You guys want me to do this one? Let me see, hold on. No, we got to go this one. This is a little too... It's just a little too, you know. I mean, you got ideas in here. And then we call that this is a little too steep anyway. Maybe it is like this. Maybe we really do level this off. You know what? Let me just... Well, I don't know what the fuck that was, but... hold on, guys. Yeah. What does this look like? What? Okay. And then this was a breakout. But then that would make... difficult to say. Your trend really in the most recent term is this, right? This is really the trend as of now. Got all these wicks. So we can just cut it short. Let's just put it right into here. There you go. That's at least for now. There is a longer trend. We'll figure it out later. But just for the idea, right? When you think about this trade. Okay, well, I need to wait a day, right? Need to wait a day. Are we going to be going into... You're going to put like 30% of your portfolio on it? Absolutely not. This is a bearish chart. It's ridiculous. Super bearish. But based on rules, there's a chance there in terms of risk reward. And if it's going bid from the start that, okay, my worst case scenario is I break even. My best case scenario, I'll make 100% that first day. Make 100%. What would the move be? Will it be in relation to this trend in here? Even if it was this trend here, guys. Even if it was that trend there. Okay, that's 100% in like 3 days. My risk of losing, possibly I get a 5% because it's hard to get stopped at the break even. Maybe I lose 5%. Okay, you lose 5% of, let's say, $2,000 for the chance of making another $2,000 in a few days, right? So risk reward, absolutely taking that trade, right? What is that? Okay. So, you know, again, what is this candle here? I mean, this is a bullish candle. That's a ton of inflow. Like I said, it opened. You get this outflow, but it's a rotation. Then it's an inflow into the market. It's the outflow is from here, but again, this is going elsewhere, and the cash isn't. Take a look at the cash. It's so important to see that money that's outflowing from tech is not being turned into just cash right now. It's not. Save. Resistance. Yeah. I mean, again, if you didn't miss this trade, it fucking stings. I bet it does. It should sting. Those of you that missed the trade, I'm going to keep saying it. Because it's so important to be critical, because there's times in my trading career that I've done I've gotten so tunnel visioned on ideas, and I remove my ability to trade different charts. It's got to sting so that you stop caring about companies and caring about what they do and everything else. They just should be symbols. They should just really be symbols. And then when you like them, you got to be able to throw them away, right? You got to be able to throw them away real quick. Okay, let's well, that didn't help. Okay. What's the idea in here? And again, we're doing this because we shouldn't really be taking an active approach right now. I don't think we can do it like that, boys. That ain't gonna happen. I mean, I wanna obviously do this, but that doesn't really work. You can't really do that. That don't make no sense. That doesn't work. In terms of this move, you don't really have an identity, which was the problem before, right? It had to have bounced in there. What's happened over here? Well, you're gonna need to do some consolidating in here. If this just whips up, then I mean, okay, well, we'll take it on a breakout. Dirty looking, huh? It's just going to continue the trend. I mean, it held over here. That's a very good hold. So you want to give that a day or two before. But again, these are they do turn into buy opportunities, of course. They turn into buy opportunities at being such a low price. Nothing's changed on those charts. Of course we're going to go buy solar again. Are you kidding? Now, did anyone get hurt through here? No. We were out of this trade immediately. Did we short it? No. You don't short. So, again, something that we're bullish on, you can't then all of a sudden... So we took this trade over here, right? We took the trade from over here. Like, I can use this trade as an example too, right? We took the trade from over here. We traded it through. The reversal started to come. You could have sold on a reversal since it was bouncing back and forth so much, or you could sell on the trend line. Re-enter. As soon as the trend line breaks, we take profit. Can you short here? If this was a different idea or a different chart that didn't have a bullish move already, sure. But you can't flip-flop on going long and then going short. If you were day trading or something, fine. But in terms of our understanding of probability, just because this broke down here and we took profit because of it, doesn't mean you can then go ahead and short it. Did it make the move? Yes. So in hindsight, sure. But in terms of risk to reward, there's a higher risk to short this here on a chart that's overall bullish. And I talk about that with my short-term patterns as well, right? You get a short-term bearish candle on a chart that's overly bullish. If it's on a trend, it's going to blow right through that bearish candle, right? It doesn't care about one candle. It cares about the month. It cares about the overall week, right? And so we were buyers. We bought, took profit. Buyers took profit. Didn't touch it. We don't touch it and we buy it, right? So we're always minimizing where the loss is and maximizing where that gain is, right? And it's the same thing every time. So again, we don't care that it's down here. Some of you have an emotional response to solar being down, even if you're not in the trade. Remove that. Remove it. It doesn't hurt you. You don't care about this. You don't actually care about it. And I'm just talking in general, of course. I know no one here really gives a shit about anything. You guys are just, cogs. All right, what else are we talking about in chat? Just alerts. Well, unfortunately for all those new people that came here for the alerts, they're going to learn real quick that there's actually learning to do. Sorry, guys. Before the alerts mean anything, those of you new guys, by the way, I think we have about 5 or 6 new people. So those of you that don't know, starting the new batch, I'm going to go up to like 20 or so new people and then cut it. Maybe 10, 15. We'll see. But the point is that you can have someone alert you something. And we have a lot of good examples of this because even people that have been here for a year now, you get an alert and then we all take the trade and then half the people are down, half of them are up. Something that's up 20% and half the people are losing on the trade still, even though they're good at trading or think they are. Just kidding. But it doesn't, again, it comes down to such a small amount of time that it's so much about the understanding and following rules, and it's really easy to get caught out of those rules as you're trying to do something that other people are doing, right? It's so much of just about learning, not about the monetary value at the start. You build up that base, that really a base of discipline through a good strategy. And we have a good strategy. You can't be, when people ask like, how do you stay disciplined? Right? I do the same thing every day. A lot of you do the same thing every day. Most of you don't. This is your fucking job. You stay disciplined every day by having a good strategy and having it work, right? And so even when it doesn't work, how do you stay disciplined? Well, it works. It's part of variance, right? So you can wake up and do the same thing every day, and it continues. You don't get to that point until you understand the strategy and you've learned the strategy and the method and you follow rules and you've been consistent and you've practiced and you understand and you're patient. You understand it takes more than one day, right? And then that develops the discipline and you can do it every day and you feel confident, right? But it's still, every now and then you can still see the cracks begin to show. People fall out of it and try to go back to bad methods that never made them money in the first place, trading off of Twitter and news and, earnings is coming up. Let me put just one lotto, Don. Just one lotto for my earnings play. Just one. When they could have put that one trade on something else that they know was doing well, right? And that's where that discipline comes in, or you knew you could have put a stop in and you didn't put one. You could have been at zero, break even. Instead, you lost $5,000. No big deal. Let's make it back tomorrow by putting another lotto on. That's bullshit mentality, right? That's the fucking coward mentality, right? It's silly. It's gonna take more than one day. You're not gonna make 100% your first year. I mean, unless you start with $200. Then every trade we go for 100% here. If it's not 100%, stop me out then. But that's for one trade. Your portfolio doing that is a whole different story. So, again, we're realistic. We follow simple rules. We take something complex and simplify it. It's a lot easier to solve a problem that's simple than a complex one. So, how do you solve the problem of the market with all its complexities? Well, there's too many different problems to solve, right? There's too many different things and too many timings, and you just don't know. None of us here have the information or under the know-how. It's impossible to be perfect. So what do? Well, we create a smaller problem, a more simple problem out of the complexities here, and we turn it into these ideas of trend lines and levels. And then we through the problem ask ourselves the question. Are we on support? So our rules of buying on support, selling resistance, that's our new simplified problem. And first of all, we have to find these levels and everything. Am I on support? Is it coming off of a pullback day? Am I breaking out? Am I on a trend? These are simple questions that we can answer, right? And through the simplification, we're able to then make decisions that we react with those simplified questions as well. Is it breaking support? Yep. Okay, I better take profit. And so we don't go into, what about the fundamentals? You know what? What about Save's fundamentals about the fact that they've now cut down about 3 inches of seat space so they can fit 2 more seats and they're going to be able to charge prices. And you know what? During the pandemic, they've flown less flights, and so they're actually charging less and trying to generate a little bit of extra demand and volume, get people flying. People don't care about middle seats. Fucking pack them in there like sardines. Masks. Have them social distance in the lines at the airports, and then fucking pack them into the little metal tube, and they'll forget about it. Don't even worry about it. You start to like, or what about the businesses, and what about Joe Schmo that is the CFO, and the fact that he made a decision to, you don't fucking know anything here about that. You guys are, no one here has any clue how any of that shit works. You might think you do, and some of you make a few $100,000 a year doing shit like that. It doesn't fucking transfer into this. So we don't try to solve that major problem and then try to understand when people are going to buy and sell because of those things. We instead keep it simple. You're going to miss some trades? Absolutely. Are you ever going to blow up your account? No. It's impossible to blow up your account by trying to solve the simple problem here. If you follow your rules, right? It's just not going to happen. Will gap downs happen and blow up your one position? Absolutely. Plenty of trades. You're going to be up 20%, feel good, no reason to sell it, and then tomorrow it gaps down 30%, wipes out your position. How often does that happen? Maybe twice a year. Maybe twice a year. Do you put your whole portfolio on one trade? Well, then I guess you'd have to think about it a little bit more and maybe stop putting your whole portfolio on every trade, right? Sort of like our Cosa Nostra. Put the whole portfolio on the trade. But that's a little boy account. You're willing to lose a small amount of money for the gain. Which is why I was talking about if you are a smaller, you're at that $25,000 mark, around there. Of course you're taking riskier trades than we are. Some of us are, right? Of course you are. So it's money that can be made back in a smaller amount of time. It might mean more to you than others, but it's a smaller amount of money and you can be a little bit more nimble with it. It's a lot easier not to lose the money as well. And so the amount of speed that you have of getting in and out of positions, right? Yeah, it's about the learning part. You take those tools and you start to use them, and it becomes very hard to stop. Think about all of you that like last year were like, you know what? I'm going to quit my day job. I'm pretty good at this trading thing. And I always use the example like, listen guys, listen. You just put your money in the market anywhere in here, anywhere into the beginning of or even to the tail end of April. You got to always look at that number, because if you didn't beat this number, right? If you didn't beat that number with active trading, then, I mean, think about it. If you put, this is where I talked about, you got to think about that. Let's say you make 50%. 50% is an absolutely phenomenal year. 50% is an absolutely phenomenal year. Let's say you make, I don't know, what's the national average? Like 50,000? Do you know how much it would take to make 50,000 with your active trading at 50%? You would have to have a $100,000 account. Your IB account, your Robinhood account would need $100,000, and you'd need to make 50% on that for you to quit your day job. Most people are not doing that. Most people are having you're back and forth. And that's where you got to start to be like realistic. Yeah, some of you are going to make like 500% on your $5,000. But what about when you reach 25,000? What about when you reach 100,000? Do you know what you're supposed to do? Right? Yeah, it's going to happen. And then once you get up there and you start compounding, sure. Again, bigger focus, which is why today I want to make sure we're not like too focused on what's in here and we're losing the bigger picture. It's really easy to get unfocused. Like me. I keep talking instead of doing what I'm supposed to do. What are we seeing? Anything becoming a little clearer? Do we have any charts that are showing some clarity besides the ones that we're already looking at? Healthcare, I think, is showing us a lot of clarity in terms of where those are going. A lot of understanding of, okay, a lot of future value up in here, longs coming through. And remember, on pullbacks and everything, remember with volatility, the fact that this volatility is not higher, it's going to make everyone a buyer, right? And so it's hard without any macro understanding to. S&P's down 0.5%. So V just tracks this chart here, right? So like these charts, what's today? Today's Tuesday. It's Tuesday, guys. Do you think price is going to be higher or lower Friday close than it is right now? If you think that the chances for yourself that price can be higher on Friday, then you would have been a buyer down here. If you're unsure, then you do nothing until it becomes clear to you, right? Higher than McKee's on Saturday. Where is that little shit, by the way? He must be working. He's trying to make back the losses from the gains that he spent. It losses in brain cells. What do we do with this DBX trade? I think you gotta wait till tomorrow still. I think it's very easy to get caught trying to trade this through here today. DBX tomorrow on support, I'd be a fan of. I think in terms of this trend line, I really wish I could see where is it? Oh, it's way down in here. No, it's there. This is a little more conservative, maybe through here. Might have to wait a little bit. Retail stores are still breakout territory, so any retail stores that are going on the breakout, absolutely. REITs continue. I mean, again, value continues. So, I mean, there's still like at least 100 tickers out there that are trading on a trend, right, towards the upside. Here's a good example. What did we just talk about with the Viacom and Discovery positions, right? Trending, and we talked about this break through the top on the trend. What does that usually lead to? Look at these charts, right? And how do you make decisions on these charts? How do we make decisions on a chart like this? When you get on top of the trend and then it breaks through, oh, we take profit, right? So it got rejected on the resistance here, so we take profit. Great job, trader. Whether you were from here or maybe from down in here, those were our trades. And guess what? It's going to offer us another opportunity, but we're not going to hold through that. Of course not, right? Of course not. And you finally got your chance, right? You finally got a signal in terms of what to do with that trade on the down, like for taking profit, right? You don't take profit anywhere in here. You take profit on the clarity that comes through of understanding where the level is. Here's the open. As soon as it goes through the trend line, even as soon as it opened below the trend line and you saw that that price was not continuing towards the upside and breaking the high here, you're done. X. What'd you guys do with X today? Be curious. What'd you guys do with X today? Whether you took the trade, so we took this trade, we took profit on the rejection, on the resistance, we re-entered the trade here. What did you guys do yesterday or today on this trade? Did you guys hold through the support yesterday, and then what did you do at open? Hold X. And you're going to find through a lot of these answers that, okay, here, let me show you on the daily, because fuck the, okay. So first of all, if you held the position, you'd be up right now, still, right? You'd still be up. This would still be about break even, right? There's really no right or wrong. Do you know what the right or wrong is here? How you re-enter the trade if you exit it, or how you manage the trade later, because it's just rules based, right? It's rules based on from where you entered. Stops at break even. You didn't get stopped out, then you just hold the trade. If you didn't get stopped out, then what are you selling the trade for? Unless it's to transition it like we did here, right? Was there any reason to transition here? We blew through the support. We blew through the resistance. I mean, blew right through it. Is there a rationale to take profit as it breaks the support? Absolutely. But you need to be a buyer over here. If you didn't, then this was not the right choice, because you should have rebought down here if you took profit here yesterday. Or if you took profit from this move here in the morning, if you're willing to buy over there, why aren't you willing to buy over here? Right? Or if your plan is to wait for more clarity, then you're not doing anything wrong at all either, right? So there's like 3 different answers. Are they all wrong? No, it's just about having the right plan and staying disciplined to that. If you change your mind every single time and you change the plan every single time, you're going to have a very hard time being consistent and making the right decisions, right? If you're flip-flopping. Let me find, like, what about GPS, right? You're in the GPS trade. What you do today, right? What are you supposed to do here? Some of you are going, I just don't know where price is going to go. If you don't know where price is going to go and you're not confident with it, that if, you held through it here today, but you're going to sell it tomorrow up here, or, it goes down tomorrow down here, and then it's down here and you didn't sell yesterday. You know where your sell point is for each one of you. And I talk to you guys in DMs about this a lot, where let's say you bought over here and then price continued, it makes the move. You know where your sell point is for yourself, right? You and I have different sell points. You know where you'd be selling on this chart, for instance. If you entered, you know where your sell point is. If you then wait a week, a few days, whatever it is, to then go sell at a different point, and you could have just done it from the get-go, you knew where you're going to sell, right? So if you just watch price continue to go down and do it, maybe it makes a bump. Ooh, you can't allow that. It's got to be, where the point is that you're going to sell. Use that as the plan at that point for managing the trade, right? At that point, you don't need to wait to get stopped out. If you're in profit and you know you're going to get shaken out of it, then just make the choice to be like, I don't know, so let me just get out of it, right? Let me go put the money on something I feel like I understand. Expedia. You were in the Expedia trade. Okay, you enter down here. Or you enter down here. Did you take profit on this move? What would be the perfect choice from where you see it now and where it looks like it is right now? What would be the best trade? What would be the best possible point to do here? You need to figure that out, right? You got to figure out how you'd plan this. If you're one to buy here, this move started and then you start selling from the open, absolutely you need to take profit. If you're in a long position and you're willing to push further, this risk might have took off a few %. But you have a long trade, you have Aprils, Junes, then you can continue to push it. You don't care about a 1%. It's not even a relative point, especially if you get down through here. Consistency. And again, those trades that are working, we continue to push and we continue to work them. In cases that we can add more, we add more. This is getting pumped with volatility again. Don't like this chart anymore. What's going to happen during lunch, right? We don't really know, so we're not going to do anything, right? There's times when we have clarity, and there's times when we don't. If it's not clear, we don't trade. Now, if you put a position on down here or here, what do you guys think the probability is that if you just push the position, if you put this trade on here on the web, right? Or if right now, do you guys think there's an over 50% chance that if you buy some calls here now, let's say some at the money Aprils or something, and if you went to bed and you woke up Friday at close, would you be higher or lower on that trade? Right? You gotta like maybe throw some abstract questions like that at yourself, right? And don't do the, oh, I'm a bull, so it's gonna be up, of course. None of that, but just objectively as a market, right? Objectively, what you know about the trend here and everything else, right? Why are people buying on this in here? Why do we consolidate in this way, in this fashion, right? Is it any different? January 27th, 62%. January 27th. 26, 27. 2.5% loss. Okay. What about this move? Let's take a look at the percent difference. That's 3.5%. That's 3.5% there. What's the difference? What's the difference between these two moves? Why did we sell everything on that Monday and then we continued to trade through here? And by the way, our chart's going the opposite way. During here, were our charts going this way? No. Our charts were going down, which is why we sold. The value charts are going up through here. But what's the difference between these two moves that are basically the same move? And one had 62% jump in volatility. The other one had like 5. Tempo. The timing. This was within one swing. This is in a consolidation that's being planned. Everyone knows we're in a consolidation. It's taking time, but there's chances. It's all planned. What does that usually mean? With a consolidation that we can see. What does a consolidation that we can see usually give us? It gives us the chance to trade on the breakout, right? So all we need to do is wait for that breakout to trade it. And we'll have confidence on the breakout. Why? Because we're confident about the consolidation. We understand that the market's consolidating a move, and we can understand the way in which the macros are trading. They're not signaling any more fear. Why is there no fear? Because everyone understands that they're consolidating. They're rotating positions. We understand what we should be objectively doing as a market, not just ourselves. As a market, we objectively understand. This is not lying to you, right? It's not lying to you. We understand there is something incorrect about the idea because it's not pricing in the bid side. Because right now, this should not be here because of the sell side. It should be up here because of the bid side. If we've already made the move, again, that's trading on futures. Spot VIX trades on futures, gets the value from futures. Futures are trading on future value. It's pricing a move that is going to be more through here instead of up here or down here, which is incorrect. And all of us know that price is going to be making a move, just like it already is making a move and continues to. It's not. No futures. The futures market is not projecting price to be over here come April. It's just not. That's ridiculous. So we know there is some problems, but that shows us short term, and short term volatility is not telling us that there's a problem. Which means we keep going. We see an opportunity, we take it. We keep pushing our positions. We stop out on the ones that don't have legs. How are you guys doing with this AMC position? It's a little wild in that chain, to be honest with you. You could tell the bag holders are trying to get some prices for their positions. The market started selling and they're like, oh shit, I gotta get out of my AMC position. Travel, 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 banks, 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 REITs, 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 all trending. Do you need to trade something else? You don't. You don't need to force another trade. Energy. Banks. Does anybody know what this profit was? Did anyone look at the Apple puts? Does anybody know what that profit was on the marches? I bought a whole gradient of them. Whole gradient of them. I'm not. That's why I'm specifically not specifying. That's called dos la casas, but I'm not going to gloat. I just want to show you the power of taking a trade like that. Because guess what? That's what fucking separates the rest of us. It does. I'm not going to gloat on the trade or even post anything, but I want you to understand. Taking these kind of trades, and you don't even need to know which way. You don't need to know which way. Putting that straddle on, as soon as you get the movement, it can only go one way, and you're only going to remain in the trade if it goes one way. And so you remove the other side. All this technically was a short. As soon as this week hit, right, I knew it was just going to be a short. This trade, from here to here, right, it's like I was joking about. That's dos la casas right there. Easily. For some of you as well. And I talked about the big difference of being able to trade the mega caps. What mega caps offer you and why we talk so much about why institutions use them as sort of liquidity holds is that due to its size and the amount of active trading, liquidity, if you have higher capital, you can put on a position in a very quick amount of time that would require 100 of those small caps, right? In the mid caps. It would require hundreds of trades. It would take a week to put that amount of money into trades that sort of revolve around the same idea. So to be able to put all of that on at once and to just say that there's going to be a move one way or the other, right? Like we did on Friday. I'm going to clip it because I think it's important because it does show sort of what we do here. So I'm going to use that little marketing. But anyways, the ability to go put a significant sizing on, right? This wasn't like some of you are still following like some 1% or 5%, right? This is a major position I put on, obviously. Hyped it up. And so that sizing is different than making
let's say you make 300% on a trade, but 300% on 1,000 compared to 300% on 10,000 is very different. 300% on 100,000 compared to 300% on 10,000 is significantly different. And you start to think about those numbers, it would require 100 trades for this one trade here for me to make profit. So for that same profit, I would need to, let's say for a trade that I would make, hundreds of percent on, it would require a lot of trades that are making 100%, which is not going to be an average. It's not going to be the average. Maybe, again, 30% of them or maybe 100%. So it would require hundreds of trades for this one fucking trade that I made over a weekend. The difference there, again, is for most of you, your trades are more... This would change your whole thing because, again, it's going to take you fucking months. It's going to take you months of consistent trading to make that return that you can get over a weekend here. Capturing this, will I have this same success on another trade this year in terms of a short like this? Probably not. Probably not, because you don't usually get the sizing and everything else there. You strive for it, and all you can do is just look and prepare and ask yourself a question every single day of what's happening. Do I understand what's going on? Do I have the confidence to put this trade on? Is everything lined up? Do I have, there's so many things have to align for you to be able to make these trades when they occur for the larger sizing, right? If you're going over 10% sizing on a trade, you need to have absolute fucking confidence. And yeah, when you don't have full 100% confidence, you straddle and you go both ways. You know a move's going to happen, but you're not exactly sure which way because the market could do either. But you know it's going to be a move. And so just with that, right, then you go over 10% of your portfolio sizing on one trade, and you do that. These kind of moves, again, are what going to change because guess what? I feel a lot better knowing that I don't need to make hundreds of more trades to make up for a loss, and I don't need to make hundreds of trades to get that profit percentage that I want and the amount of money I want when, again, all it takes is that extra bit of work and focus and discipline, right? Imagine, some of you that also took this trade that only took the long side, right? You didn't take the trade. It's a different trade. It's a completely different strategy. What about you, those of you that sold it over the weekend? Maybe you did have the straddle on the short side and you sold the short side because it was up on Friday, right? Again, that's not staying disciplined. If you guys took the same trade, right? And I want to talk about straddles a little bit because it's important. And so it was right around here, this 128 point is where we took the straddle, went long and short. And then Friday happened and you saw the puts were down. And so you exited them. You sold them. You said, you know what, we'll just keep the calls. And then Monday happens. Again, you didn't follow what your plan was at all. You didn't follow the plan at all. It doesn't even make sense why you took the trade then, right? And so, again, just like we did with travel, just like we've done with banks, just like we've done with a lot of the value plays, go look at that and go think about what would it take for me to make that trade. Talking about yourselves, what would it take for you to make that trade? And how do you find that trade and how do you get the confidence to make that trade? To be able to go put a significant amount of money on a trade? Because there's times when you're going to want to put more than your $100 on there. That's a joke, but I think some of you do make $100 trades. If you are, that's just gambling. That's a lotto, right? But you gotta find where and what it takes for you to make some of those trades. Because again, you're gonna have a very different outlook on things if you're able to make those trades and know what it takes to find them, and know that all it takes is just that continued focus and everyday watching and learning and feeling the market out. That it only takes that one trade that you don't need to work probably the rest of the year for most of you. So that's why you're here every day. You're grinding every day for that one trade, right? For that one trade. Now, most of the time it's about consistency, right? But we never leave it off the hook that there is that possibility of just one trade, right? And we talk about those moments. We've talked about those moments. A lot of you have been part of those moments. This all-in play over here, the all-in play from the election, the all-in play from over here, this was a very small gain. I mean, on the underlying, only 3% of the market, 100% trade. 100% trade, 100% trade. Over here, madness, right? But a lot of trades, a lot of consistency involved over here. But these are, again, there's different times for everything, and you got to work through that moment. But yeah, we got paid on that trade, so. And so that's why those of you that follow me on Instagram, I post the Palm Beach or Miami because we need to get the fuck out of here because New York City sucks. I'm dry. I'm sick of the cold. We are doing Florida winters, boys. We're getting older. It's time. You should live in Florida all the time? No, it's not a better place. I don't think so. I don't think so. Definitely not. It's definitely not a better place. It does have pros during the winter and during different things. The people are definitely not better. That's for sure. And I'm planning on living in so first of all, Palm Beach is where all the banks have been, right? And so, of course, I was down there a few years ago. So I can live in that Palm Beach area, which is where all, a lot of them have moved their offices. Miami, where the rest of them are. I like that. There's a couple areas over there. But yeah, I mean, it's just no masks. It's fucking ridiculous. Like, I don't leave my place anyway. It's COVID. I don't go do anything, but. No, I am planning on very soon. Maybe, I don't know. Anytime. If I see a place, I'll just get one. I don't want to buy a place. I just want to rent a condo just to be, because I'm not 100% sure. But yeah, New York kind of blows right now. It was fine for a little while. That doji. It's a tight doji. What do I want to take for a trade? We don't need to force anything, right? We don't need to force anything. We don't have to get in right now. We're not going to miss it. We're not missing anything. Do want to lay some ideas out, though. We know what to keep pushing. This is telling us everything we need to know in terms of expectation. Short-term trades are on the menu. This continuing, I mean, yeah, it's a bit of a bearish candle on the day so far. Unlikely to end like that. I'm happy with the GE trade still. I mean, I'm not going to exit that. I'll get stopped out. I'll get stopped out at that $12 mark. I'm not going to exit that. That's silly. Money's still coming out of treasuries. There's a lot of cash out there, guys. There's a lot of cash out there right now. I don't want to get too verbiage on you guys, but the heck is that? They're doing something with our we got window cleaning guys. Hello. Hi. You're banging on my window. Hey, can you stop that? Thank you. We got the window cleaning guys. And he's on my fucking window on one of those little crane things. Scary fucker. He's got a ski mask on. Thought he was gonna rob me. I don't even have any paintings in here. Whew. Be careful. FBI, the fucking SEC is taking the long way. Taking the window washer way. Break through the glass. Let me clean those windows for you, buddy. Bang, bang, bang. Okay. It's not a squeegee. Buy the dip? Absolutely. Do you guys hear this guy? He's looking right at me in my eyes. Gonna maintain eye contact. It's just a little awkward because I have no pants on. So I'm just staring at him straight in his fucking eyes. He's got one of those big fucking things cleaning the window. He sees me laughing too. Oh, this is awkward. Now it's getting cringy. Now it's getting pretty cringe. Nah, it's just cringe. He must think I'm like on OnlyFans or something. Camming. Oh, God. Alright. I gotta focus. I'm losing focus. Okay. If only he knew the truth. I wonder if he's got Robin Hood. Should we tell him a trade? Maybe get him join the Discord. You fucking stop, I'll give you some advice. That's just fucked up, Fibs. I don't think we can hear each other through the window. You hear that fucking thing banging. Yeah, does he want to give us... I mean, he might give a better... I mean, a monkey could throw a dart and give a better idea than you guys. You guys want to buy the dip? Do you guys want to buy, like... I mean, I don't want to interfere with it, so I'm not going to. Got my own ideas. Place my own trades. Interesting day, right? Again, patient day. You don't need to do anything today if you don't want to. You can wait until tomorrow to see that. You know, think about the difference right now. If you buy right now on the support, like if we're just looking at the average, again, a lot of our charts are very different, and you need to be trading those accordingly to what we have. But you know, if you're looking at the average here, and you think about going long from this moment right now, buying support here or just waiting till tomorrow to buy support if it's there, if it is there. What are you losing? What is your risk reward? Like, what is the difference, right? In terms of chances, what are you going to miss? It's where you start to think about some of these, and I think sometimes you can be a little bit more patient. A lot of the times when we buy dips, we're pretty aggressive, but not today, because we came into this week being patient, tighter stops, understanding that we're in a consolidation, understanding that tech's been selling, right? I think when you have that understanding, from my point of view, having the understanding that tech was selling and rotating, everything was rotating out of tech into value. And again, not to get confused with our bias being value, and so then it always has to be value all the time. No, it could change, but we understood that this was selling and going into value, but understanding that this will affect the overall average, and that line I said yesterday of we're only as strong as our weakest link, that being demand is only as strong as is really this weakest link, then it's hard for the rest of the market to continue if it doesn't have that sort of tail following, right? It's hard to continue to push that if everything's connected, then you need the trend to continue with it. So obviously there's some understanding there. I think you just gotta wait, right? It's okay to wait. You miss 1% here today for the chance to go make a full 100% move tomorrow. Think about it, guys. You guys are going to have such short-term fucking memory that if we have a green candle tomorrow, you guys are going to be all hooting and hollering, woo, we got gains today. Yeah, it's green. Let's go. You guys are going to come fucking forget completely about this move. I'll bet you right now. I'll bet every single person in this call right now $100. $100 right now that you guys, if it's a green day tomorrow, are going to be all hype and all excited. No doom and gloom. You guys are going to be like, woo, we got gains. And I guess that's very abstract, and I guess no one's going to get paid because I'm going to just be like, you guys are doing that anyway. So, but anyway, you know the point. You get the point. It's, fucking part of the process. You guys are scared. That's a good fucking time to realize that it might be time that, first of all, hopefully you got rid of your positions that were, you should have already had stops. And then that feeling that you're having is a great opportunity to go fucking buy something, right? It's a great time. Specifically right now, no, it's fucking lunch. Go take a break, right? What have you done today that you needed to watch everything for? Is there anything you need to watch right now? And again, this is a good point to make. And those of you that are newer, we trade from 9:30 to about 12 o'clock, usually a little bit earlier than that. And then from about 2:30 to 4. Usually from 3, a little bit later. Why? Because the volume is all in the very beginning of the day and all at the very end of the day, and nothing else really matters in between. This price action in here, not much accuracy. We're removing a lot of the volume, which removes accuracy and also makes the spreads wider. Makes spreads wider, and everyone here complains about wide spreads for a good reason, because it's hard to trade wide spreads. So we're not going to trade wide spreads. Right? And so that's why we don't force anything during lunch. We watch lunch for management because we do have times where that pullback lunch can cause stops or reversals to be sort of protrude from the move that was happening before. So for instance, this could get very violent very quickly in terms of the move today, but we'll also get a good confirmation of whether the support's going to hold down here. And so it's sort of like, it's not double-edged, but it certainly is sort of a variance based on that spread and which way the market wants to be going. In terms of today, what's the most likely thing to happen? You're going to swing back and forth, and you're going to get a lot of buyers on every big move, and you're going to get a lot of sellers on every big move. So it's just going to be volatile back and forth without much understanding. But you know what a lot of people on the street are going to do? They're going to fucking get up from their desk, and they're not going to look at the market right now, which is what everyone should do. Because you know what's going to happen during lunch if you're sitting here looking at your 5-minute charts and shit? You're going to be wanting to place a trade that's going to hurt you. You're going to want to place that trade on this pullback right here. You're going to want to go buy something right now. You're going to want to sell that position that's up 10% still on your long terms, and you're going to exit your long term because you're watching, let's say you're watching a SPY 5-minute and you see it goes down 20 basis points. You're like, well, it's those you in fucking Europe that are already eating dinner. You're no longer focused because your kids are fucking yelling. You already ate dinner. You're already having a drink. You're going to watch the market go down a little bit, and you're like, you know what? Let me just get out of this long position. I got to go to fucking bed. I'm sick of listening to my damn kids. I'm sick of walking this goddamn dog. Right? These type of things like affect things. During lunch, we take a break. We take a break. We stop watching. No more tick, 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 tick. Right? JJ, oh, drink. Thanks for the alert. It's, it's important. And I think looking at price right now, other than the fact that there are opportunities that present themselves because of lunch, but it's not until towards close that you could even get close to really taking that trade, and that's why we'll just wait until the morning. Unless there's a reason to preempt the trade, which is usually around some sort of resistance, because we talk about gapping, which is sort of like those value charts that, guess what, we did get paid on those charts, by the way. But in terms of average, no. But when you get into this territory, right? Where you start to go, okay, you know what? There's actually is a chance in here that this is going to gap into here. Now, of course, this did not react because of itself, react because of the broader market. There are charts that look like this that did open up into there, right? We have, again, all of travel and banks and the like, right? Those all did that move. It's important to understand that it's those charts that we're most bullish on in trading that. We will make preemptive moves. You don't make a preemptive move on a chart that's bearish if you're trying to go long. You don't do that because you need clarity. And guess what? You're within a consolidation, but you're going to consolidate it more through the idea of confidence, right? You're going to get some sort of confidence that's going to generate more bid if the market's going to go long. This could just sit down here. This could be setting up a great new opportunity that we can go 100% cash in. And guess what? A lot of us were 100% cash in yesterday. A lot of us were 100% cash in. That's the reality. It doesn't always pay the same way, but if we do it consistently, you're going to get paid more times than not because you got to be in position and you got to be willing to take that risk, not gambling risk and throwing dumb positions on, but absolutely taking risks for that reward if it's there, right? If it's there. And again, there are so many charts out there that we're going to see make moves, and the same thing's going to happen like every single time we get one of these consolidations that I have to talk about so much about. That's when we need to be most active and ready and focused because, again, there's going to be those opportunities. What do you think SunPower is going to be at by Friday? What do you guys think solar is going to be at by Friday? What about like pot stocks that we looked at? It doesn't even need to. It doesn't need to actually do it to think it, right? To just see it. You need confirmation tomorrow, so you can't put it on right now. But it's starting that dialogue with yourself and finding those and looking at them and being prepared for them, so that when it does open tomorrow on the support, you can go put a trade on there and be like, all right, go put my stop right at my break even. My risk to reward, well, my risk is I've got support in here. I'll get stopped out. That's my risk. Maybe my time I lost. But if there's not something better, then that's it. There's going to be chances. There always is, guys. There always is. Ask yourself another question. Are we about to go into a bear market for the next month? Perma-bear's wish. The perma-bear's wish. Because we shorted. Because I shorted. Not Facebook, I wish. Because I shorted Apple. Because I shorted Tesla. Does that make me a bear? Does that mean I can't go trade this to the upside now? No, it doesn't. When will we be able to trade this to the upside? I don't know. You can't buy it down here, though. You can't buy it down here. What's more likely? Is it going to get to here or here first? It's be more likely to come down here than up here first. Most likely. But is it going to do that? Most likely not. It's going to consolidate this move over here. This is a giant spread. It's going to consolidate somewhere in here. And through that consolidation, give us an idea of when we can take a trade, whether it's to the upside or downside. But we're not going to change biases just because of different reasons, right? Since this isn't on a trend and it is on a downtrend, we don't buck a trend, right? We don't buck trends. We go with the trend. We don't fight the trend. We don't enter into consolidation until there's a break one way or the other and we take the trade, right? Let's do one last look. Nothing's changed. Watch volatility during lunch. Again, volatility can creep. There are ideas still with volatility blowing up fucking bonds. So we will watch that idea. But there's a lot coming out of treasuries. The money's got to go somewhere, and so far it's not in the fucking dollar. So it's got to be going somewhere. It's not going under the mattress. Greedy institutions are not putting money under the mattress. They will make something happen. We can't make something happen. So come close. I'll jump on a little earlier. We're going to find out what the big boys are doing because they're going to give us direction. They will give us direction today because guess what? They're not patient. It takes them a long time to enter trades, and for sure, but they're not going to sit back today. If they have any inclination that this market is done consolidating and that this is the point, they will show us. And there's a lot of ways to look at this already in terms of our view. If you look at this chart in terms of banks and value in general, travel and everything, the reinflation idea is on. It has never fucking changed. And that's why we trade this. We're trading this. We're not trading the SPY. We're not trading the Qs. So why should we trade anything else? We need a fucking reason. If they don't give us a reason, then we keep doing the same thing. If you're not already making money on this stuff, you got to change up that bias of yours. You got to change up that bias of yours. Unless something changes, we continue with what's working. We don't fight the trend here, right? We don't fight the trend. It's only until that trend fights back and reverses, right? We were trending, pullback, normal, natural pullback. We buy it, and then, okay, a little different over here now, isn't it? Feels a little different. Absolutely. We're no longer on that trend-only buying. But guess what? You made a lot of money in there for being on that mentality until it changed, right? So keep with the trends. Look at those charts. Don't be edging over fucking 5-minute charts all lunch. Again, drink some water, take a break. You don't need to force anything. You're not going to miss anything, I promise you. You're not going to miss anything, I promise. It's not going to be, you're not going to miss a big trade. So I'll see you guys maybe 15 minutes or so till close, 20, 15 minutes. And until then, enjoy. Those of you in Europe that go to bed, I'm just kidding. Well, it's fucking early. Do something else. I'll see you guys at the close. Enjoy.